Undervault there of Bloomberg Markets Live. Now back to Munich, and Volkswagen chief executive Herbert Diess spoke with our Matt Miller earlier today at the IAA Motor Show. Now he cautioned that the semiconductor shortage will probably last a few months or even years, and also touched on the company's push into self-driving technology.
We need time to get electric, because we need the capacities, the plants for the battery cells, and that will take time. So we are running at probably 6% electric car sales worldwide. In Germany, 20%. In some of the countries, already 70–80%. Norway, Sweden, Holland. And it depends a lot on the local policies, and where the policies are in place to change, we are very fast. Could we be faster? Not a lot, because the supply chains for batteries, for the new technologies, the capacities we set up are such that we are fully booked, and we hope to continuously grow, but until 25, we are aiming at 20–25% EVs, which will be a tough target because of the supply chains.
But you need to double your sales. You're going to double your sales of electric vehicles every year?
Exactly,
In terms of the semiconductor shortage, it looked like for a moment it was going to be a bottleneck issue and then come back, and now there's a double dip. How does that play out?
Yeah, we expected, actually, you're absolutely right. We expected after the summer break a relief situation as we set up a lot of recovery plans and bought additional capacity. But we suffered a setback mostly through COVID, because in Malaysia was hit hard by COVID, the back-end plants of our semiconductor manufacturers. And that hit us hard. We hope to overcome this new situation towards the end of this month, probably next month, and then recover in the last quarter of this year. So, but as you said, always it was after the first quarter, after the second quarter, third quarter, overcoming those really crisis issues. I think probably we will remain in shortages for the next months or even years, because semiconductors are in high demand, Internet of Things is growing, and the capacity ramp up will take time. So it will be probably a bottleneck for the next months and years to come.
Well, that was the Volkswagen chief executive Herbert Diess speaking to our Matt Miller, who joins us now from Munich. Matt, when can I, get into a car, sit back, read my book, and it's all automated?
You know what, they do have a few of those vehicles here, but it's still going to be a while before they come out on the market. So they have concept cars here that are driverless, autonomous vehicles. Passengers can just get in, like robo-taxis, or some that you can even buy like for your private use, and they'll drive you around. But it's going to be a few years still before they get on the road. They've got to deal with not only the technological side, but also the regulatory issues. They've got to figure out the culpability issues in case of an accident, and it's just going to take time. For now, their real focus is getting the electric vehicles out there and doing the kind of sales that they want. You heard Diess say they have 6% of their volume worldwide is electric. Of course, they're one of the biggest car makers in the world. If you look at a smaller car maker like a BMW, they're already at 11%, and they want to continue to ramp this up. The chip shortage is one of the biggest problems, of course. You heard what Herbert Diess just said, and Elizabeth Behrmann, my colleague, spoke to Oliver Zipse, the CEO of BMW. He said today it's going to be 6 to 12 months at least until the chip shortage is sorted. So this is a longer-term issue that the automakers are going to have to deal with.
Matt, I mean, I know that a lot of the focus is on mobility, a lot of the focus is on green issues. What's the most exciting thing at the auto show?
You know what, to me, I don't know if the exciting is the word I would use, but you know how the TikTok boys have really short pants and then they wear white sneakers, like Stan Smiths have made a major comeback? Now I'm seeing all of these middle-aged auto execs walking around in a suit, usually no tie, and wearing those white sneakers, trying to kind of emulate that TikTok look. I think it's a little embarrassing, or should be a little embarrassing for them, but that's the biggest trend that I've seen here so far.
I mean, I love that, man. I think it's like Jackson Hole circa 2019 when we used to see central bankers in suits and ties, including Jay Powell, with then sneakers on their feet. I like it. I quite like the look. Keeping up with the times. Our Matt Miller, he's not wearing sneakers on his feet. He's actually wearing proper shoes. We'll talk about proper cars, maybe convertibles, shortly with our Matt Miller. Coming up next, Christian Schulz, City European economist. We'll talk about the German election. We'll talk about the pivot to green and, of course, inflation. This is Bloomberg.
Are you still committed to the U.S. pickup market? You mentioned how small it is, and I know you do good business at the frontier, but a lot of times Americans want something bigger like the Titan. Is that, do you plan to stay in that market as competitive as it is?
I mean, for us, market is one thing. The second is what customer aspires for from Nissan. And customer in United States aspire for sedans, SUVs, and the pickups. And Titan is a great pickup truck, and we are, of course, focusing on the Titan. But as I said before, that in our whole lineup, our main focus is always been in the sedans and SUVs and the smaller pickup truck.
The power of Bloomberg.
Let's get the session started and wrap up the trading week.
News.
Who knew that one earnings story could take the entire market? There's upward pressure on wages.
Analysis.
This is really a slow, ongoing implosion.
Context.
Is there veracity to this granular data of ADP?
It's an ugly report.
The power of the Bloomberg terminal. The power of Bloomberg television and radio.
Tesla's the one that we got our eyes on.
Bloomberg has it covered.
Welcome back to Bloomberg Markets. I'm Francine Lacqua here in London. Now, we've been hearing from finance and economy ministers from across the European Union as they weigh the risks posed by rising Eurozone inflation. Now, they spoke to Bloomberg from the Ambrosetti Forum over the weekend.
I don't think that it should come as any surprise that there is a spike in inflation right now this year.
We are not concerned
by the current level of inflation in the EU or everywhere in the world.
Inflation is very much influenced by energy prices and food prices.
All the institutions consider that it will be a transitory feature, and we have to avoid that it becomes structural.
We think that this increase is a temporary one.
We are monitoring it, and we should monitor it very accurately, but without going to conclusions too soon.
We remain vigilant, but we are not concerned.
It is a natural feature of a very strong recovery that we're witnessing.
Well, Christian Schulz now joins us. He's a Citi European economist. Christian, thank you for being with us. Do you worry about deflationary pressures, or do you actually worry about inflationary pressures that will force the ECB's hand?
The forcing the ECB's hand is certainly something to be worried about. The underlying question is, of course, unanswered. I side with the ministers and commissioners that were just interviewed. The main problem for a stronger inflationary picture in the Eurozone is effectively the labor market. Many people unemployed, many people furloughed, many out of the labor market altogether. The same global problem. When these people try to get back into jobs, they force down wages, and that is really a big problem for the Euro area. However, I think there's also concern that the high inflation at the moment will translate into second round effects, higher wage demands, perhaps via indexation as well, and that therefore the ECB will look at this with a little bit more concern and become a bit more hawkish in the months to come, maybe even already this week.
So, Christian, what does it mean in terms of what Euro does? I mean, what is the biggest concern for ECB right now? Is it what the Fed or other, maybe smaller central banks, if they raise rates? Does it put pressure on the ECB to act sooner?
Well, the Fed is, of course, very, very important. I mean, with that pair, the US dollar is very, very important. We saw that on Friday when the US labor market data disappointed and Euro went up. That is, of course, bad news for Europe in two ways, because on the one hand side, a very important export market is not as strong as perhaps expected. And on the other, the Euro goes up, both deflationary problems for the ECB and something they can't really do much about. Of course, they can send a dovish signal this week by perhaps keeping the pace of PEP purchases the same, but it looks like the hawks at the ECB are in the ascendancy. So our take is that they probably reduce the pace of PEP a little bit and a little bit further than at the start of the year, to then smoothly go into the back of the old APP, the old asset purchase program, the pre-pandemic one from March next year. I think overall that's not a particularly dovish message. The Governing Council will be quite hawkish, and that shouldn't be too negative for the euro.
Christian, what are you expecting in the German elections? I know the polls are tight, or there's a big margin of error. There are a number of coalitions, but actually, what would be good for the economy right now?
Well, the one to watch really of all these coalitions that are possible, and by my count, at least 5, if not 6, the one to watch is the left-wing alliance, where all the left-wing parties come together, because they have a lot of policy overlap, a lot of more spending, public investment, but also higher tax rates, a lot more regulation, higher green prices, and so on. That, I think, would be good in some sense for demand, but it would be bad for supply in the economy, and therefore quite inflationary. Others are all coalitions that reach across the political divide, so they're probably constrained by opposing policy objectives, and therefore in the end quite the same as we've had under Angela Merkel for 16 years now.
But Christian, how does it reshape, when you look at deficits, when you look at the German economy, can it actually reshape the future of Europe depending on who's in charge in Germany?
Yeah, I think who's in charge very much matters, because that person's going to represent Germany at the negotiating table at the future EU summits. And there's big questions coming up. There's the question of perhaps upsizing, or at least making permanent the recovery fund, more risk sharing from Germany's perspective, completing banking union, completing the single market, these sorts of questions. If somebody like Olaf Scholz, who's an experienced finance minister, becomes chancellor, as seems increasingly likely, he hits the ground running. think that should be good news for stability. If somebody new like Annalena Baerbock or Armin Laschet comes in, they need a phase of learning on the job, and that's going to take them time. In particular, of course, as we don't know what's going to happen at the French elections, and also what happens in Italy when the presidency there ends and Mario Draghi perhaps gets promoted one level up. So it very much matters who's running Germany. Olaf Scholz would be the safe pair of hands.
Christian, when you look at German Bunds and, for example, Italian BTPs, do you see yields converging even more to what we have now?
It looks like at the moment that the SPD, the Social Democrats, will get a very strong role in the next government, most likely lead it. And that is, I think, for spreads, or that should mean less risk of a Eurozone breakup, because the SPD is very pro-European, but it's also happy to engage in further risk sharing. Scholz has called the recovery fund the Hamiltonian moment, so more fiscal federalism. That should be positive. That should be positive for BTPs versus Bunds. On top of that, you get perhaps a bit more fiscal expansion, which should be negative for Bunds on the other side of that spectrum. If we end up with a government without the SPD, or with a more right tilting majority, that poses slight risks. But I mean, overall, I think the one message from this election is going to be Germany's commitment to the euro, to the EU, is unwavering. The extreme parties have not made any advances at all since the last election. So from that point of view, all continuity.
Christian, thank you so much for all of the wisdom. When you look at some of, I guess, the pressures from China, I don't know whether we should look at it independently, looking at the world economy, or whether there's concern that the supply chain issues, because of port closure, because of the no-COVID policy in Asian countries, could actually impact policy in Europe.
Well, this morning we got the factory orders data for Germany. Factory orders are 15% above pre-crisis pandemic. They're at an all-time high at the moment. At the same time, tomorrow we get production data that is likely to still be about 5 percentage points below pre-crisis level. There's an enormous gap between demand and supply that needs filling. So I think there's a lot of fuel in the tank for a multi-year manufacturing recovery, which is going to benefit the European economy. However, in the short run, there's risks from the supply shortages, which you guys have discussed very well, of course, already today. There is this question mark about China's regulatory tightening and what that means for Chinese growth, which is the most important market for German manufacturers. But underneath all of this, I'm convinced that we've got a multi-year manufacturing upswing ahead of us, just because we need to fill that gap between demand, which we see in orders, and supply, which we see in production.
Christian, what happens, and I know we're a long way off that, but actually what happens if we don't get the full infrastructure package in the US? Is the world economy at risk?
No, at least not from a European perspective, I'd say. The US is, of course, also a very important market, but it's a market which is fairly stable. It has its ups and downs, and some of these ups and downs are driven by the political cycle. A big infrastructure package would clearly be good for demand, but if it doesn't happen now, it's going to happen perhaps in the next presidency or the one after that. The US is a stable market. It doesn't influence investment, say, in the euro area as much as a market, an upward trending market like China does. So I'm looking much more at China in terms of the manufacturing outlook or the cyclical outlook for the euro area than I'm looking at the US. And as I said, at the moment, I think I'm pretty convinced that we've got a long upswing ahead of us, but we have to, of course, face the facts that in China, a lot of things are trending downwards at the moment. And if China is so important, I can't say that there's no clouds on the horizon.
Christian, thanks so much. Christian Schulzer, Citi European economist. Now let's get straight to the markets desk with our Emma Chandra. Hi, Emma. What are you looking at?
Hi, Francine. Wanted to take a bit of a deep dive on European equities for you with this particular market hit. Of course, we're focusing on Europe, given, of course, that the US is closed today for that Labor Day holiday. Looking at strong gains across the continent and in the UK, the Stoxx 600 gaining some 0.6%, inching ever closer to its all-time high. The FTSE 100 also gaining some 0.7%. And within that, I wanted to mention Burberry. Burberry doing pretty well today. Lots of rumours that it is a potential takeover target. target. Of course, a lot of deal making happening in the UK and Britain, of course, about the third largest market globally following the US and China for takeovers this year. Finally, also mentioning DAX here up some 0.6%, of course, rising in the same way that we are seeing green across the screen for much of Europe. But of course, on Friday, hearing that the DAX 30 is about to become the DAX 40, and we're going to have 10 new members by the end of this month. Airbus among those, and that's gaining a good 1%. Now, let's have a look at how the industry groups within the Stock 600 are doing. This is the GRR function on the terminal, and you can see here it's a majority of them in the green today. Only, of course, construction materials and real estate, the laggards there, and down not that much. It is tech that is the big leader, gaining some 1.5%. It's the German global connectivity platform TeamViewer that is the leader there and leading the whole of the Stock 600. It's an interesting stock, only went public about 2 years ago, is actually down some 30% on the year, and a lot of short interest out on that stock too. But hearing that at least one long-term skeptic may be cutting that short position somewhat. Finally, let's take you through some of the other big movers today. You have, of course, been talking about what's happening with aluminium, and of course, we're seeing the aluminium maker Norsk Hydro putting in a big gain there, up 4% now, was up around 5% earlier. Of course, those concerns within the market about the supply of bauxite clearly very important in the making of aluminium, and that's sending the price higher and, of course, the stock higher for Norsk Hydro. Looking at Leonardo, the biggest aerospace company, of course, from Italy, this moving some higher by about 2.5% off the back of an interview on Bloomberg Television on Friday, actually, when the CEO told us that they're looking to move ahead with the IPO of its US arm, DRS, as soon as possible. And finally, Dechra Pharmaceuticals, one of the worst performers, down 4.8%, was down close to 10% earlier. Francine.
Emma, thanks so much. Emma Chandra there with the very latest market moves. Now, coming up, Joshua Sharfstein, he's Johns Hopkins Bloomberg School of Public Health Vice Dean. We'll ask about booster shots and vaccines. This is Bloomberg.
With the First Word News, I'm Angel Feliciano. Oil extended losses today after Saudi Arabia slashed prices for Asian buyers. That's raised the prospect of fierce competition among sellers. There's concern because the resurgence of the coronavirus continues to cloud the outlook for demand. Meanwhile, natural gas prices are undergoing a historic surge, and it's threatening to the global economic recovery. The cost of gas is already at record seasonal highs in most major markets and looks likely to rise further. Economists warn it's another risk factor for lasting inflation. And the Biden administration is feeling confident it can persuade a key Democratic senator to support the president's $3.5 trillion tax and spending package. Last week, Senator Joe Manchin demanded what he called a strategic pause in the White House economic agenda. But the president's chief of staff told CNN that Manchin should be persuadable by the argument that the package adds nothing to the debt. Singapore is the latest country to lift the ban on the Boeing 737 MAX. The plane is now legally allowed to fly in and out of its airspace again after it was grounded globally in 2019 for 2 fatal crashes. The MAX also was cleared to fly by Malaysia last week and India the week before. China still hasn't lifted its ban. Global news 24 hours a day, on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Angel Feliciano. This is Bloomberg.
somebody said, I want to be the next Reid Hoffman, what would you say is the best training ground to do that?
Well, I'm still young enough that I'm still hoping to be the next Reid Hoffman myself.
Merkel, after 16 years in power, actually, remains one of the most popular, if not the most popular, German politician ever. Who's the right person to fill those shoes?
Well, whoever is going to be filling those shoes is going to have a very hard time. Look, as the Merkel era ends, most of the certainties which we Germans, during 16 years of Merkel, tended to take as forever are evaporating before our eyes. The eternal assurance of the United States always protecting us, that's gone out with Donald Trump. The certainty that we will build an ever closer union, the EU, has gone out of the window with Brexit.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Trading revenues coming in better than expected. Everything. Cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Welcome back to Bloomberg Markets. I'm Francine Lacroix here in London. Now, Hong Kong Land, the biggest landlord in Hong Kong's most expensive office market, expects demand to withstand concerns about political clampdowns and pandemic setbacks. We spoke with the executive director, Raymond Chow, earlier.
Obviously, the macro environment is always something that we deal with on a regular basis. But in reality, we don't see the leasing demand subsiding at all. What we see is a lot of corporates now are elevating and going back to quality. So they're actually moving and going back to quality sort of premises, which is basically what we offer to them.
But a lot of travel has been obviously restrictive right now, and people just can't travel around the world. How difficult is it for you to strike these new contracts and get more people to lease your properties right now?
Like I said, we still find the market actually quite vibrant and resilient in the central portfolio. Mm-hmm. We see a lot of clients are actually upgrading and coming to us in terms of the facilities. Mm-hmm. So we, like I said, it's proven by the numbers. Our vacancy has dropped since the end of this year from 5.9 to 5.5%.
I know you talked about people looking for more quality, re-centralization, you can call it, I guess. But there's still going to be about 9 developments outside of Central that are also set to open up as well. You hear the likes of BNP Paribas, Goldman, they're moving at least their back office staff to cheaper locations as well. Do you still believe that there's going to be a decentralization, or is it actually the opposite that's going on?
No, I don't see that at all in the portfolio over the last few years. I mean, there's a lot of talk about that, but I haven't seen that in the portfolio, my portfolio at all. In actual fact, what I've seen going forward is actually people want to come back into Central and taking
even with this office space that's the supply that's supposed to be booming in the next month. Okay.
Absolutely.
Why do you think that is, though?
Well, I think Hong Kong, what we offer in the Central District is a very, very unique ecosystem, as I said before many times. You can actually, this is probably one of the few places you can actually do 12 meetings a day without actually leaving within a 1 mile radius of it. You can go from one building to another and do 12 proper meetings a single day. I don't think any place in the world could do that. Not New York, not London, and not Tokyo. If we've been there many times, we will go to meetings. Maximum you can do in 1 day is 4 or 5, and that's very, very efficient already. The efficiency that we provide in the Hong Kong portfolio is that you can do 12 meetings a day, and that's very, very unique that I don't think no one can match.
Do you feel like you still have a couple of years before these buildings open in Central for you to try to take up as much market share as you can in the next coming years?
Well, I think it's more the other way around. I think we have a very strong position here. Over the last few years, we've done a great deal in terms of accentuating the amenities that we provide, like this concentric space, the flex facilities, a lot of the F&B ecosystem that we have. And again, so I don't believe that it is, yes, short term is competitive, but having said that, medium and long term, having these new buildings in Central is actually very, very good and very valuable. It brings the whole Central District into a very much stronger position.
You mentioned about Singapore, Shanghai, Hong Kong. I mean, these are all big hubs in the region as well. Are you seeing, I mean, you mentioned that there's not a lot of people willing to leave Hong Kong at this point, but are you seeing anyone at least recalibrating how they view some of these markets and where they strategically put their offices now, given just the activity that you're seeing in these cities?
Well, I think everyone really looks. I think everyone puts satellite offices in these core markets. But what we've seen is that actually Hong Kong has basically still the anchor of all the head offices here. Well, we have not seen anybody actually made a big move to move the head offices into other jurisdictions. But again, for Hong Kong, it's very, very simple, right? It's basically because of the core pillars that we've said. You've got the low tax rate, you've got the free flow of money, you've got the rule of law, you've got a very good regulatory system here that's internationally recognized. You've got a very, very strong HR pool. And also, you've got the proximity into China, which is one of the biggest growth markets in the world. So geographically, Hong Kong is very uniquely placed to thrive in this new business arena, in the commercial arena.
Well, that was the Hong Kong Land Executive Director, Raymond Chow. Now let's get more on the virus with Joshua Sharfstein. He's Johns Hopkins Bloomberg School of Public Health Vice Dean, and he joins us now. Dr. Sharfstein, thank you for joining us, especially on Labor Day. So happy Labor Day to you and all of our American friends. When you look at some of the questions that people have, it's booster shots, is how's the vaccination rate going, and what do I do because my child is going back to school? What's the question you get asked the most in this transitional period?
The question I get asked the most is when vaccines will be available for children under 12. And that is a question I cannot answer because we don't know the data yet for kids under 12. And hopefully we'll have some of that data and the FDA will be able to share it transparently, convene its advisory committee, look at it and help people understand what's there and make a good decision. That may happen sometime this fall.
When are you expecting the Delta variant and the huge surge that we saw in the U.S. actually to start to trail off?
Well, there's some signs maybe in some states that that's beginning to happen, but then there are other states that are potentially vulnerable. So, I think most of the models show like by the end of September and to mid-October, it'll be trailing off. And in some places, the question is going to be how far down it goes and whether it really goes far down or it just bubbles along and there's still a lot of people affected. We're just going to have to see where it goes. There are different things we're seeing around the world, and actually even in the United States, it may look different in different regions.
So who needs booster shots, Dr. Sharfstein, at the moment? I mean, there are a number of trials, and I have to say, if you're not an expert, they can be quite confusing. It seems that if you've had COVID and then 2 vaccinations, you're much more protected than only if you've had 2 vaccinations.
Well, certainly people who are immunocompromised, I think, should get booster shots because of the risk that you didn't respond that well to the first 2 shots. And there's some evidence that with the 3rd shot, more people are responding. Beyond that, it's a little, I think, early to say. I'm looking forward to seeing, a little bit more of the data behind it. There's a hope that the FDA will be able to see the raw data from Israel and really look at it. There's some, statistical illusions that sometimes happen. People need to really get into the data to see. The challenge is distinguishing whether immunity is waning or it's just the Delta variant. And if it's the former, then booster shots have a stronger case. If it's the latter, it may not matter that much. One thing I can say is that what's really important is for people who are not vaccinated to get vaccinated, certainly particularly people who haven't been sick with COVID before.
Dr. Sharfstein, when you look at the winter months, is there a danger that Delta gets worse, or is there a danger that we could have another mutation because we get into the winter months?
Well, I think one of the concerns, and pediatrics is showing the initial area of concern, is that what's going to happen to other respiratory viruses. And so it may happen that, right now in pediatrics, we're seeing respiratory syncytial virus have some very severe infections in kids, and that's also creating problems in children's hospitals that are filled with COVID patients. And so, we had this very unusual year where there were very few viruses in general, and so we don't know exactly what's going to happen this winter, but that could be a complicating factor.
Dr. Sharfstein, thank you so much. Of course, Joshua Sharfstein and the Johns Hopkins Bloomberg School of Public Health is supported by Michael Bloomberg, the founder of Bloomberg LP. This is Bloomberg.
会場に行って観戦するということも難しいお子さんがいるんです。このように冷房の効いた香港の体育館の中で、それこそ大会の最前列で観戦ができる、体験ができる、こういうことをとてもありがたいことだなというふうに思っていますし、この技術に感動しています。予想以上に子どもたちの反応が良かったというのはですね、とても校長として嬉しく感じております。この子どもたち、どれだけオリンピックの心待ちにしていたのかっていったことがよくわかるような今日の表情です。
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lines in New York. Perspective on the day ahead. Bloomberg Surveillance, Early Edition. Weekday mornings on Bloomberg Television.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Hi, everyone. 12 p.m. in London, 7 a.m. in New York, 7 p.m. in Hong Kong. On this Monday, September 6th, I'm Francine Lacqua here in London, and welcome to Bloomberg Markets. Now, there is quite a lot going on in the markets. Certainly, it is for a Labor Bank holiday in the U.S. Happy Labor Day to all of our U.S. viewers. The focus, of course, is on that jobs report that we had on Friday. Now, European stocks are rising. U.S. equity index futures are also rising. Again, today it seems that investors are betting that a slower hiring in the U.S. may actually delay tapering of the Federal Reserve stimulus. But I have to say, if you look at the Friday movement, it was a little bit all over the place because the miss was so big that there was underlying concern that it was just bad news for the economy, even without thinking about stimulus. Aluminium also hitting a decade high amid some of this political unrest in Guinea. Now let's head over to the markets desk with Emma Chandra. Emma, what else are you seeing?
Well, I wanted to take a big look across Europe because you mentioned there, of course, that European equities rising, and we're seeing it across the screen when you look at the European continent and, of course, at the UK. We've got the FTSE 100 rising some 0.6%, the CAC Quarante up around 0.7%, and the DAX up some 0.6%. And it's really mirroring what we saw in the Asian session, where we also saw solid gains. And, of course, you mentioned that the US closed for that Labor Day holiday today, but futures open, and we're starting to see some gains there. And that is all related, it seems to be, to that much weaker than expected jobs report on Friday. Of course, that miss, investors hoping, means that the Fed will have to slow down any plans to taper any stimulus. And that's why, of course, we're looking at this green across the screen. The other big story in the markets today, of course, is aluminium hitting that decade high. We should have a chart which will show you its performance year to date. And I wanted to show you that because I wanted to show you how well aluminium prices had been doing over the course of this year, up some 40%. They were trading pretty highly anyway this year. That, of course, down to all that stimulus we've seen globally and how that had impacted demand, of course, as well as we saw smelters in China, the bigger producer, perhaps struggling with that demand. That had also forced up the prices. And then we see that unrest in Guinea today, of course, pushing those prices even higher. And there is some real concern in the market that bauxite from Guinea, that's the concern, that supply will be constrained. Bauxite, of course, key in making aluminium. Finally, another board view, just looking a little bit cross-asset, because also looking at oil today, which is down. We should be able to show you both WTI and crude, both of them falling today. This, of course, is Saudi Arabia slash prices for Asian customers. We should also be able to show you, but not at the moment, never mind, also be able to show you Bitcoin, which is having a bit of a strong day. This ahead of El Salvador making it a legal tender from tomorrow, Francine.
Emma, thank you so much. Emma Chandra there with some of the market moves. Now let's have a look at what else is ahead this week. President Biden will likely make his choice this week on whether to renominate Fed Chair Jay Powell to a second term. Then tomorrow, El Salvador becoming the first country to accept Bitcoin as legal tender. On Wednesday, we have Dallas Fed President Robert Kaplan holding a virtual town hall discussion. And then Thursday, we get the latest ECB rate decision and press conference from Christine Lagarde. Well, joining me in London is our Bloomberg MLive strategist, Eddie van der Veld. Eddie, it's not boring this week. Today, the markets are a little bit quiet, but actually traders are trying to figure out what to make of the NFP figure that we had on Friday. But then
absolutely.
It's full swing ahead for the rest of the week.
Oh, absolutely. I think we've got so much to be excited for. There's that ECB, there's the beige book that I've been talking about the whole morning, and we just really want to hear from Fed speakers what they make of all of this, right? So there's a lot to be excited for in markets, absolutely.
So what do you make of what we heard from the NFP? I know you were talking about the fact that actually the markets didn't know where to look, right? So you have this huge miss, and if you're a trader, you think, right, does that mean more Fed stimulus, or actually was the number just so bad that you kind of just want to go home and hide under your desk?
Yeah, look, we actually asked that question on Markets Live before the number came out. We asked, look, if these two things go in different directions, if we see, jobs growth slowing and we see inflation picking up or wage inflation picking up, which one's the market's going to listen to? And, I think my sense at this moment in time is that the market is looking towards the inflationary noise. We're not seeing break-evens move an awful lot, but we are seeing yields move a little bit and we're seeing gold move a little bit. And I think, I think what this is a difficult situation for the Fed, and it just brings that worry about stagflation back to the table.
Eddie, I want to talk to you about commodities, but I also want to talk to you about Joe Biden. And so if he does not actually reconfirm Jay Powell, the market's not really focused on this. Is it because the names that were floated, would be just as dovish as him?
Yeah, probably. I think, I don't think that the market is particularly worried about that that fact at this moment in time. They've got so much else on their plate at the moment, right? And it would be a little bit of a surprise. I think, the market is quite comfortable with Powell at the moment, and, we haven't seen strong indications that he is not, Biden is not.
Commodities. You look at commodities every day, along with crypto.
Right.
But today's also a bit different because of what we're seeing in Guinea and aluminium at a decade high.
Oh, yeah, absolutely. Look, it has been a bit of a perfect storm, as much as I had that quote for aluminium. We've seen prices run up this year anyway because, of supply chain disruptions, of, just the ramp up in demand for goods globally. And then at the same time, there's this worry that, supply chain disruption, the worries over supply chain disruption has been with us for months now. And suddenly we're getting to that point where if you see a producer like Guinea, we're not even shutting down production, but if we're just worried about them shutting down production, and that will just boost prices.
Eddie, thank you so much. Eddie van der Walt there from our Live team. He, of course, stays with us for extra LACWA support. Alberto Gallo, now Algebri's partner and portfolio manager, joins us. Alberto, I want to ask you about the jobs report on Friday, but you also have a great note out talking about China's long-term game. What is the market not understanding about this long-term game?
Essentially, both China and the US economy have similar issues. There's lack of growth, demographics is slowing, and there's a lot of inequality. But what's interesting is both China and the Western economies, the US, Europe, the UK, are trying to solve this problem, but in very different ways. In the United States, we have a sluggish recovery, and the response is monetary policy. One-size-fits-all responses. There is the idea underlying this with also the rise in modern monetary theory discussions that there can be a free lunch, which is something that in economics everyone has been taught as an impossibility. But the idea is that the US can print enough money to solve inequality, to solve climate change, and that central banks in the West are the solution. Obviously, there's also infrastructure, but it's mostly a one-size-fits-all story. And this brings markets to a Goldilocks environment where currencies depreciate and stocks go up. And what China is doing is very different because they are tackling all the micro problems like inequality, monopolies, corporate monopolistic behavior, all these things they're tackling in a very surgical microeconomic way with regulation, and they're very much more focused on financial stability rather than easing. In fact, the PBOC has been one of the central banks more on the hawkish side. So the paradox is, the paradox is what's good for the economy is actually bad for markets. So China is doing something that long-term might work for the economy and for equality, but it's really bad for investors. And the UK are doing, which is loose monetary policy, works very well for markets, but it's not going to rebalance the economy.
Right. Alberto, I want to ask you about the implications of common prosperity in a second, but I also want to bring in our MLive columnist, Eddie van der Walt. Eddie, when you look at, Alberto was talking about Goldilocks scenario, and something that we hear almost day in, day out. I don't know whether that Goldilocks market scenario gets pulled out if something happens with inflation and therefore central banks need to move, or something else could actually, show up in a correction. I
love this Goldilocks scenario because this is a kind of a reverse Goldilocks, right? In that things are just bad enough that the policymakers won't want to remove stimulus, right? And at the same time, inflation's picking up, but it is just not hot enough for for them to start panicking. But I think that worry is going to be on the inflation side, particularly on the wage growth, and I think particularly on this, even if that slow jobs growth, if that turns out to be a result of struggling in hiring rather than it is in as a consequence of there not being enough jobs out there, which the JOLTS data certainly tell us there seems to be a lot of jobs out there, then I think this is something that the market will be worried about.
So Alberto, how do you see this reverse Goldilocks scenario being put to an end?
Look, on inflation, the answer is if you put 10 economists in a room, you're going to get 10 or more different answers. It's very hard to forecast, but we are not convinced that inflation is transitory. And we see that some of the supply bottlenecks which are causing inflation are actually a lot more persistent. In particular, let's think about all the geopolitical bottlenecks. You know, China becoming more isolated, the U.S. In turn onshoring production of certain goods. Let's think about, you know, the chip makers. Intel CEO saying the shortage of chips is going to last for another 2-3 years. So these things are not transitory, and they're going to drive costs up in terms of production costs, and companies are passing it over to consumers. Then there is the wage discussion. The Democrats are very careful about, you know, minimum wages, and the Fed wants to reach full employment. Eventually, you know, we'll have a rise in wages. In the UK, we already see that, given the supply of labor is constrained because of Brexit, but we might see something in the US as well. So eventually there is an end to the Goldilocks. There's an attempt from central banks to normalize policy, but it remains an attempt. What we're going towards is a more state capitalist environment where government has a bigger role in the economy.
Alberto, thank you so much. Alberto Gallo, their Algebra's partner and portfolio manager. Now, coming up in the next hour, we speak with Neil McKinnon. He's VTB Capital Global Macro Strategist. I know he usually has a thing or two to say also about the UK economy. That's coming up at 8 a.m. in New York, 1 p.m. in London. Now, remember, it is a pretty big week. Not that much going on in terms of market movements today, just because it's U.S. Labor Day, so a lot of the markets are closed. But then later in the week, we have the Reserve Bank of Australia rate decision and some China trade data as well. This is Bloomberg.
With the first word news, I'm Angel Feliciano. The price of aluminum climbed to its highest in more than a decade following a military coup in Guinea. The West African nation is a major exporter of bauxite, the raw material used to make the metal. The head of Guinea's special forces says he took action to address financial management and corruption. Here in the UK, it's likely to be a tough week for British Prime Minister Boris Johnson in Parliament. Today, he'll be forced to defend his handling of the Afghanistan crisis. Plus, Johnson faces a backlash from his own Conservative Party over reports he is planning a tax hike on workers to boost funding for social care. That's something the party has pledged not to do. And the United Arab Emirates plans to increase its trade ties in fast-growing economies in Asia and Africa. And it's hoping to draw $150 billion in foreign investment from older partners. The UAE will also ease visa restrictions to try to attract foreign talent. The country has been the Middle East's commercial capital for more than a decade. Now it's facing competition from Saudi Arabia. The CEO of Volkswagen fears that the global chip shortage may last for years. Herbert Diess told Bloomberg TV the semiconductors are in high demand and it will take time to ramp up capacity. The chip shortage has been constraining auto production around the world. Traders returned to the London Metals Exchange's iconic open outcry trading floor today for the first time in 18 months. It's been closed because of the pandemic. Traders fear that the volumes will be sharply lower than before the floor was closed last year. Plus, an outbreak of the coronavirus could force it to close again. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Angel Feliciano. This is Bloomberg.
can come together to help less developed, fragile, vulnerable countries with adaptation and resilience, and we can do what we, developed world, need to do to reduce the damage being done by our practices of the way we produce energy.
But how likely is it that we keep that 1.5 degrees within reach?
Well, look, the Paris Agreement said well below 2 degrees. That's what everybody signed on to. What is well below? It's certainly not 1.9 or 1.8. It's somewhere close to the 1.5 degrees. And so I think it's very important to do it because every decimal point of rise in temperature is remarkably compounded in the damage that it does. We're at 1.2 degrees today, and you see what's happening. Imagine what happens when you're at 3 degrees or so, which is the track that we are currently on.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
I support the new framework.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Oil extending losses after Saudi Arabia slashed prices for Asian buyers, raising the prospect of fierce competition among sellers. Well, let's bring in Bloomberg's Will Kennedy, and still with us in London is our Bloomberg MLive strategist, Eddie van der Veld. So thank you both for either sticking around or joining us. Well, I mean, this really caught the market by surprise. First of all, what's the underlying reason for Saudi to do this?
Well, as we discussed last week, there's more OPEC oil coming into the market, and I think that Saudi Arabia was keen to ensure that their buyers in Asia, by far the biggest market for their oil, kept buying, and that they wanted to reassure them that they would do something to help them. I think that, you know, in previous months they had raised these official selling prices, which price Saudi oil compared to international benchmarks, and they'd raised those prices, and I think some of the customers were hurting a little bit. They have other places they can go to get oil, so it's just a signal, I think, Francine, that while the oil market remains pretty good, Saudi Arabia is just conscious that there are other sources of oil out there.
So, Will, what's the correlation between if you cut the price of oil by, you know, $3, $5, $10, does it automatically, you know, increase demand?
Not necessarily, but I think it makes your oil more attractive compared to oil from Abu Dhabi or even the west coast of the United States. So it's just a way of giving buyers the incentive to choose Saudi oil rather than, you know, US oil. How strong the correlation is, I think, depends on wider macro factors about how strong demand is for oil in any given time. And, you know, to be honest, demand in Asia looks pretty good. India's recovering strongly. China seems to be out of that blip from concerns about the Delta virus. You know, we're getting into the winter where demand can often increase for heating fuel, especially in Japan. So the demand picture is pretty strong.
Let's also bring in Eddie van der Veld. Eddie, I know we've been talking about commodities quite significantly. I don't know whether these are idiosyncratic stories. So, you know, aluminium, whatever you want to call it, because of what's happening in Guinea, oil because of what's happening in Saudi, or whether there's like an underlying, you know, narrative underpinning all of them.
I think there is a little bit of an underlying narrative. I think there's definitely, we are seeing, you know, the supply side of a lot of commodities are tight, and I think that helps. We've got, you know, the reopening trade is still in progress. Oil has obviously got its own idiosyncratic factors, you know, in that, you know, OPEC has been supporting the price throughout most of the year. And I think we're starting to see the signs that OPEC would pump into rallies. So therefore, the upside for oil is a lot more capped than it would be for metals. But, you know, I'd love to hear what Will has to say on that.
Yeah, Will, what's your take?
Well, look, energy is extremely interesting right now. I think Eddie is right that OPEC is willing to produce more oil, and that is capping the prices. But globally, energy prices are incredibly strong. Natural gas prices rallying hard. In Europe, natural gas power prices are close to all-time high. Coal is very high. And that is, as Eddie says, about reopening and the recovery in the economy and more, so we've got that demand side looking very strong against supply side constraints. So in a way, oil is the outlier here. If you take oil out of the picture, other energy commodities are very strong. And as Eddie said, we've seen some real strength in metals like aluminium, highlighted by the coup in Guinea, copper. So, oil is a bit of a distraction. Outside that, commodities are extremely strong.
Well, thank you so much. Will Kennedy there in charge of our commodities coverage. Now, Bloomberg's Eddie van der Veld from MLive stays with us. We also talk about cars. Volkswagen's partner developing self-driving technology is just a few months away from starting to test autonomous vehicles on public roads in Germany. Well, the VW chief executive, Herbert Diess, spoke with our Matt Miller earlier today at the IAA Motor Show about the company's work with Argo AI.
It's a race towards autonomous, who gets the first licenses, who can prove safety for the passengers, who can roll out the first pilot projects in cities. So it's still not about scaling. We have to prepare for scaling, but still it's a race to get the technology right. We are very happy with Argo's progress. They're coming to Europe now with the first test fleets. I think we have a superior technical concept. Our laser scanners are better, more range, more precision. Brian Zalewski has a very good team, one of the best teams. So I think we could close the gap against some of our competitors, and we feel strong that we together with Ford and together with Brian's team, we can be within the top teams of autonomous driving when it comes to robo-taxis mostly, to mobility as a service.
Well, can you imagine sharing also that with then other brands later, or is it something you want to keep for yourself?
We are only an investor. Now we have a 40% share of the SDS kit development, currently with Ford. Yes, we would be open to share.
It seems like it makes up a huge part of mobility, and you want mobility to make up a really significant part of your revenue.
Not as many people think. Now, our estimation is that by 2030, where we are focusing our strategy, probably 15% of mobility might be such kind of autonomous services. 85% cabs, 85% will be private cars in different use cases. No, also probably some of them shared, rented.
I see 15% and 85%.
15 and 85, that's our estimation. No, it will grow. No, the mobility as a service will grow, but will it wipe away the car business? No.
And in terms of how much revenue you'll make from the mobility?
It's very early to say. I think there are several revenue pools in this services business. Now, we need a platform to book the service to match supply and demand. Then you have a business to run the fleets in the cities. You have to build the cars, which is very similar to what we are doing now. And you have the additional business of the driver, the SDS kit. Now someone has to take the responsibility and charge for it. So there's, I think, good potential for growth and profits as well. And it will be probably very fast growing, but it will not replace automotive. So I think it's additional growth. We think the entire mobility turnover by 2030 can be twice as high as today, because of such kind of innovation.
So, but mobility, software, tech, it's not going to completely overtake your business. You're still going to be, at the core, a company that designs and builds cars to sell.
Yeah, very true, very true. We think brands will remain very important for the customer to make their choices, also to express themselves. So we will maintain all our brands, but technology will play a much bigger role.
Well, that was the Volkswagen chief executive, Herbert Diess, speaking with our very own Matt Miller earlier today. Now, coming up next, we focus once again on the jobs data out of the U.S. We also talk about the Fed and inflation with Neil Shearing, Capital Economics Group chief economist. We have a great story, our most read story on the Bloomberg terminal, talking about China and actually what, their common prosperity actually means in terms of further crackdowns and industries they could go after. So we'll ask a thing or two about that to Neil as well. This is Bloomberg.
What do you predict the Taliban will do in the coming months and years?
I would say consolidation of their power and gaining international legitimacy and recognition. This is the priority for the Taliban, not supporting transnational jihad, not basically in any activities outside of Afghanistan. If you really watch carefully what the Taliban have done in the past few days, they are engaged in a public relations offensive. They are trying to convince the world. If you listen carefully to what they're saying, you think that the Taliban are newly born Democrats. They are peacemakers. And the reason why they want to consolidate their power, they want to convince the world that the Taliban have changed.
Power of Bloomberg.
Let's get the session started and wrap up the trading week.
News.
Who knew that one earnings story could take the entire market? There's upward pressure on wages.
Analysis.
This is really a slow, ongoing implosion.
Context.
Is there veracity to this granular data of ADP?
It's an ugly report. The power of the Bloomberg terminal. The power of Bloomberg television and radio.
Tesla's the one that we got our eyes on.
Bloomberg has it covered.
Welcome back to Bloomberg Markets. I'm Francine Lacqua here in London. Let's head straight over to the markets desk where our Emma Chandra is keeping an eye on things. Emma, what do you have?
I am looking at how European equities are performing today, Francine. They are in the green, following their Asian counterparts. Of course, not seeing much movement in the US, of course, closed for Labor Day, though the futures markets are open. We are seeing some solid gains across Europe, up some 0.6% for the stock 600. The FTSE 100 also gaining around 0.6%, and it's some of the takeover targets there, or potential takeover targets, that are driving the biggest gains. The likes of Burberry, that putting in a solid gain today. And there's a different luxury stock story emerging over in France. Looking at the CAC Coron, also gaining around 0.7%, and it is the likes of LVMH, Kering, that owns Gucci, remember, and Hermes also gaining. They're leading the CAC Coron today. Now, remember, last month we saw a bit of a sell-off in luxury stocks. This as we heard about the new common prosperity policy out of China. A lot of investors running scared from that, but it seems that today they're getting back into the sector, and that may be led by a couple of notes we're seeing from analysts that are taking a bit of a more nuanced approach to that common prosperity policy from China. The analyst over at Brian Garnier saying it won't affect all luxury stocks in quite the same way, and you will still see an expansion of China's middle class even under common prosperity, and that is good for luxury. That echoed, but in a separate note, from Berenberg as well. And so we are seeing some strong gains, as I said, for LVMH, for Kering, and of course from Hermes. Finally, one more thing I'm looking at, moving away from equities, just something to keep an eye on ahead of tomorrow. Looking at the Aussie dollar, we are seeing it is falling today, declining by the most in about a week. This, of course, as elevated COVID cases still weigh on sentiment. And of course, you've got that central bank decision tomorrow. That's Tuesday in Australia. Francine.
Emma, thanks so much. Emma Chandra there with the very latest on market moves. Now, let's get straight to Neil Shearing. He's Capital Economics Group Chief Economist. Also joining me here in London is Eddie van der Waal from our MLive team. Neil, a couple of things that you put actually in your global economics update. It's succinct, it's to the point, it's a summer catch-up. How bad are some of these economies going to do in the Western Hemisphere? And actually, are they bad enough that they'll be supportive for the markets because central banks are going nowhere?
That's the big question, isn't it? Are we still in that Goldilocks situation where economies are growing, they're still recovering, but central banks are keeping policy support in place? I think actually we're approaching a point now where it's pretty clear that all economies across the Western Hemisphere are slowing. We've seen that in the data. We saw that in the non-farm payrolls data that obviously disappointed on Friday. We're seeing it in some of the business surveys too. But what's interesting to my mind, at least, is that central banks are beginning to lay the groundwork for scaling back asset purchases. Obviously, they're far more advanced in that regard in the US, and the Fed likely to make a move, probably not this month now after that payrolls data, but maybe in November time. ECB meeting coming up on Thursday. It'll be very interesting to hear what policymakers there have to say. I suspect they might start to taper some asset purchases too. So we've got this juxtaposition between the data that's starting to soften, the central banks that are getting spooked by inflation numbers that are surprising on the upside, and are starting to withdraw some of their policy support.
Neil, I want to get Eddie in a second in on the conversation, but does it actually hurt your view that economies will fully recover from COVID post-pandemic?
No, I do. We're not giving up on that view just yet. We've said for a while that we thought this crisis was different from previous crises. Normally, when you get a scale of the crisis that we've seen with COVID, you normally get a lasting economic hit. The path of output in the future is lower. We don't think this is quite the same because of the extraordinary amounts of policy support and, frankly, the unique nature of this crisis. But I do think some of the optimism about growth in the third and fourth quarters of this year is starting to be tempered, perhaps. We always thought growth was going to slow over the second half of this year just because the extraordinary gains made in the first half. I think that slowdown is going to be a bit sharper, a bit more pronounced than perhaps we had initially anticipated.
Eddie, we have been looking at a lot of the data that we got. I know we spoke at length, of course, about the jobs data. What's the coming up data that will actually give you an indication either on whether we fully kind of recuperate what we've lost since the pandemic? So it's not about the economy increasing, it's actually the economy about being at the same level we would have been had we not had the pandemic.
Yeah, I think for me, there's a lot of interesting data to look at. Like we've been talking about the beige book, and I don't want to keep hammering on it, but it's for me, it's going to be about the anecdotal data. It's going to be about the market's commentary or the CEO commentary in PMI data. It's going to be about, where are they struggling? Because I think we're entering a new normal. We don't really know what that new normal is, right? There are some things that have changed as a result of the pandemic, some things that are never quite going to be the same, but we still don't know what the full implications of those things are. So while raw data is really important at this point, I think the anecdotal, the high frequency, and the things that we struggle to quantify at this point, I think that's where the focus should be.
Yeah, do you agree with that, Neil? And actually, overall, how bad was the jobs data on Friday, given we had these inflationary pressures on wages?
Yeah, I do agree with that. I think there's the other thing I would add on the data front is that we know that the pandemic has distorted the data in a number of different ways. Just measuring GDP when you shut down large amounts of the economy is very difficult. The same is true of the inflation data. So we know the data's been distorted, which is why some of the commentary around the data from business leaders is even more important. The jobs data itself, you're right that in many respects it was of every world. The jobs number was weak, but we got the wage number being strong, which face value is good, clearly, positive development, but will just add to those inflation concerns. So more than a whiff of stagflation in the jobs data on Friday. The question really is when do we get another good deal? When might we see some of the jobs data improve? Could that happen in October? Might happen in November, given what's happening with the Delta variants?
I don't think it's, I completely agree with Neil there. It's not hard to imagine that economies growth will start slowing at this point, because it is just so difficult to keep, growing at that pace that we had before. But at the same time, there is that fear, and you mentioned stagflation, that we're in the middle of these kind of double dips. Do you think that's a risk?
Stagflation is a risk. I think that I'm pretty sure that what's going to happen with inflation over the next 12 months is going to start to drop back. I think we've done quite a lot of work looking at the drivers of inflation over the course of this year. And probably about 9/10 of the increase in inflation this year can be attributed to what I think are reasonably sure are transitory factors. Rebounding global energy prices, supply shortages of particular goods, reopening effects and things like airfares and restaurants as economies experience frictions opening up. Those should all, I think, be short-lived. I think what's really interesting is, do we get second round effects? We've seen global shipping costs soar, not yet really been passed into final goods. That could start to happen next year. And the really interesting question, to my mind, at least, is what is the central bank's position? What are the policy authorities' position on inflation now? And are they starting to soften? And perhaps viewing a little more inflation is a good thing. It will certainly help bring down the real value that's been accrued as part of the crisis. And I think that is, to my mind, the most.
Yeah, Neil, if there's, if the accommodative stimulus, I guess, stays on for too long, does it just become ineffective or harmful to the world economy?
Well, I think it potentially, it certainly becomes less effective, I think. And what's interesting is that if you think about the story of this crisis so far, when the first lockdowns happened, what happened was the service sectors were essentially shut down, which meant that spending pivoted to goods, supported by huge amounts of stimulus. Now, we're now seeing goods sectors essentially operating at their capacity limits. There's not much more we can do to juice global goods production. So if you get another set of lockdowns now, because of Delta or whatever else might happen, and softer services spending, and we've got the first sense of that perhaps from the payrolls data on Friday, there's not much more that the authorities can do to inject demand into the economy, because it's hit against the wall, because that demand will go into goods, and goods are running at their limit. So if we do services production being constrained by the virus now, I think there's not very much more that policy can do.
I mean, we used to talk, Eddie, about possibly importing inflation from China.
Right.
No longer the case.
No, absolutely. Listen, I think Neil just hit on a really interesting point there about how you can't ramp an economy up that is used to growing at 4% or so to 16% and think it's going to continue going. And the problem is we saw this earlier this year when we had the Ever Given stuck in the Suez Canal, right? Supply chains are so tight that when there's small, that was not a small event, but when there's limited events that impact one part of a supply chain, it can bring a lot of industries to a halt. And I think the same is now true of services, right? Companies would like to hire a lot of people. Can they hire as quickly as they would like to? I think we're seeing that they can't.
The trillion-dollar question. Wait, Neil, so I've noticed, my eagle eyes tell me that you have Capital by Mr. Piketty behind you, 696 pages. How many have you actually read?
I won't let you into that secret.
Okay, because I didn't make it until, I think I did 20 and then I gave up and probably watched Love Island. Neil, thank you. Neil Sherry, Capital Economics Group Chief Economist. And thank you as well to Eddie van der Walt from our MLive team. Now, coming up in the next hour, our interview, the Chief Executive of Daimler. That's at 8 a.m. in New York, 1 p.m. in London. Coming up ahead, we have a full roundup of some of the issues in the German election. We talk about cars. We talk about green. This is Bloomberg.
With the First Word News, I'm Angel Feliciano. Oil extended losses today after Saudi Arabia slashed prices for Asian buyers. That's raised the prospect of fierce competition among sellers. There's concern because the resurgence of the coronavirus continues to cloud the outlook for demand. Singapore is the latest country to lift the ban on the Boeing 737 MAX. The plane is now legally allowed to fly in and out of its airspace again after it was grounded globally in 2019 for 2 fatal crashes. The MAX also was cleared to fly by Malaysia last week and India the week before. China still hasn't lifted its ban. There's a sign that bankers' travel in Europe is picking up. London City Airport, a favorite of regional business travelers, is seeing a tentative reawakening. British Airways and Lufthansa have restored flights to key financial centers such as Zurich, Frankfurt, and Rotterdam. London City Airport offers easy access to the City of London and Canary Wharf financial districts. The Biden administration is feeling confident it can persuade a key Democratic senator to support the president's $3.5 trillion tax and spending package. Last week, Senator Joe Manchin demanded what he called a strategic pause in the White House economic agenda. But the president's chief of staff told CNN that Manchin should be persuadable by the argument that the package adds nothing to the debt. And it was a record-breaking weekend for the first Marvel film featuring an Asian superhero. The Disney movie Shang-Chi and the Legend of the Ten Rings took in more than $71 million at theaters in the U.S. and Canada. That blew past estimates and was the biggest opening for a movie over Labor Day weekend. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Angel Feliciano. This is Bloomberg.
somebody said, I want to be the next Reid Hoffman, what would you say is the best training ground to do that?
Well, I'm still young enough that I'm still hoping to be the next Reid Hoffman myself.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Happening on the ground right now, just in terms of consumer price tolerance?
We see a strong consumer right now, and you can see that even in the early starts to back to school and back to college season that we're really pleased with. And I think if we step back and look at the quarter, you know, we see the evidence of that strong consumer.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Welcome back to Bloomberg Markets. I'm Francine Lacqua here in London. Now, international flights may from Afghanistan be starting soon. That's the latest from the Taliban. The group now has complete control over the country, we understand, after defeating the lost pocket of resistance in the north. Now, Bobby Ghosh, Bloomberg opinion foreign affairs columnist, joins us now. And frankly, Bobby understands Afghanistan like no one else. Bobby, first of all, you were telling me, I mean, look, the Panjshir region, which the Taliban claim they have control of, it's uncertain whether they actually have control, but it's a very strategic kind of region.
Yeah, it's a very difficult part of the country. It's very mountainous. It's full of very difficult to access valleys and ravines. And it's where the last time the Taliban were in control of the country, they were unable to take charge of the Panjshir. That's where the Northern Alliance resistance against the Taliban was able to hold out. And eventually, when the United States led the effort to get rid of the Taliban, that's where the effort began, starting from the north in the Panjshir Valley. The Taliban now says they've taken control. We should regard that with some amount of skepticism because it's such difficult terrain. The resistance fighters in the Panjshir Valley are saying that they have deliberately given up some of the low ground and they have taken up strategic positions on the high ground in the difficult to access places. That would make sense militarily. So I feel like we need another shoe or two to drop before we can say with certainty that the Taliban control the whole country.
So, Bobby, the last time the Taliban were in charge, actually, this northern region, the Panjshir, was actually supported by the U.S. and allies.
The U.S., yes, that's right.
If this time would be the same?
Well, it's very early. The U.S. and those other allies, India, for instance, was crucial. They haven't yet decided what they want to do about the Taliban government. Things are a little in flux at the moment. So it doesn't look like the Panjshiris or the resistance fighters who have fled to the Panjshir are getting the same kind of backing that they did the last time around. If they're going to get that backing, they're going to need to hold territory for a considerable amount of time. And of course, the Taliban will make it their #1 priority to get that valley as quickly as possible.
So if the Taliban get recognized, I guess, as a legitimate state by the U.S. and Western allies, is there anything that the Taliban need to do in the next 2-3 weeks? Is it opening the airport that would actually give assurance to the West?
Well, it would certainly be a sign that they're in control. They haven't yet announced their government. So the first and most important thing that the whole world is looking for, West, East alike, is who's going to be actually running the government. The Taliban have indicated that they're going to announce a government. They've been indicating for several days. We were expecting an announcement yesterday. We were expecting one today. They've said again that that's been postponed a little bit. So that leads to questions. Why the postponement? What is so difficult? This is supposed to be an organization that was basically in waiting to take over the country. If that's true, then what's the holdup? Until such time we know who the faces are in government and whether indeed it is an inclusive government, whether other groups and political affiliations in the country are brought into the government, I don't think the rest of the world will really begin the process of recognizing the Taliban and so on. There's first got to be a government.
Who has recognized them so far, actually?
Well, so far no one's, because there's no government to recognize. There have been indications. The Chinese have said they will recognize the government. The Russians have indicated the same thing. The Turks have hinted at the same thing. People seem willing, at least some countries, willing to recognize a government. But there's got to be a government first.
Bobby, thank you so much. Bobby Goshler, Bloomberg Opinion Foreign Affairs columnist, and I urge everyone to go and read his columns. Now, over to Germany. Less than 3 weeks until the election, and German power and carbon prices have surged to a record driven by soaring gas prices. Now, environmental issues have been a key battleground for the parties, while with a heavy reliance on coal for electricity generation and a thriving industrial sector, the country is Europe's biggest polluter. So let's get more now with Bloomberg's Maria Tadeo at the Reichstag in Berlin. So Maria, at the center of some of these priorities that people will actually vote on, where does climate change feature?
Well, Francine, if you look at polls and the breakdown in terms of priorities that Germans really care about, climate comes up pretty high. Almost 30%, or more than 40%, I should say, of Germans say that this should be the next big policy priority for the next coalition government. For a single issue to have double-digit concern and support in an election in a poll, that is incredibly high. And it does highlight that this is a conversation that, frankly, even I experience on a daily basis here in Berlin. You know, a lot of this is for a number of reasons. You do have the demographics that are coming into play, the change of a new generation that is more involved when it comes to climate. You also have the German industry clearly pushing for new guidance. They say they need this in order to be able to compete in the future. Of course, also the European kind of incentives that are saying by 2050, everyone in the European Union needs to be climate neutral. And the floodings, Francine, you know, there's a lot going on around this idea, but the floodings really having an impact on the German psyche. The fact that more than 170 people died because of extreme weather in this country, something that has really resonated and put this to the forefront.
So, Maria, what can you tell us about the polls? Are they constantly shifting, and are they within a margin of error that makes it almost impossible to guess who will be in charge come the day after September 26th?
Well, Francine, on the polls, they're running very tight. And you make a very good point on the margin of error, because if you're looking at 5 points up and down, that could change everything when you're polling 25% for the SPD and the CDU around 2021. That would give both parties the option to form a government. What is clear now, however, is that the trend is being cemented. It's the SPD that continues to lead. This is no longer a tight competition to get to the first spot. It really is the SPD. When you look at the particular candidates, Olaf Scholz is extending also his lead there. When you look at the numbers for Armin Laschet, they have been a disaster for the past 2 months, and he's not able to regain momentum. His own opinion polls are really not just looking better, they look worse than that, because he's not been able to put a floor to those numbers.
So, Maria, what are the kind of policy issues? I know it's, you know, the economy is always left, right, and center. How does the refugee crisis play into it, and some of the other things that will actually influence that voter come September 26th?
Well, the number one thing, in fact, the Germans say they focus on more so than climate is social justice. And that is, to some extent, playing also a big role in the campaign. Olaf Scholz was, again, on the campaign trail over the weekend, and he did say that he wants to see a society that respects each other. He continues to use that word, respect, and where social inequality has been, in some areas, a big issue. You know, when you look at Berlin in particular, there is a huge conversation around housing and how to make that affordable housing. There's also a big conversation around the industry and how they foot the bill and how much they should be participating in making this economy greener. And of course, that takes us into what is a perennial debate in Germany, which is fiscal spending. Who is going to spend what and how much? The one thing that separates the Greens from the rest of the major political parties running is that they say the net new investment going into greening and modernizing the economy should be exempt from the debt rules, and that would be a considerable departure from what has been the usual line from Germany, still a very fiscally conservative country.
Maria, thanks so much. Maria Tadeo there for us at the Reichstag in Berlin. We're 3 weeks away from that election on September 26 in Germany. Now, coming up in the next hour, Neil McKinnon, VTB Capital Global Macro Strategist. I know the focus will, of course, be on the jobs data in the U.S. that we had on Friday. And then we have a pretty big week, actually, in terms of what we could hear from Joe Biden on the replacement or not of Jay Powell. We also have an RBA decision in Australia tomorrow. And then we have the ECB on Thursday. So I know they'll look at markets. They'll also look at inflation, looking at what inflation means for futures. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Monday the 6th, Labor Day in the USA, 8 a.m. in New York, 1 p.m. in London. I'm Guy Johnson from London. Welcome to Bloomberg Markets. Let's talk about what is happening. It is a quiet session. Let's be honest, the US is out. It's sunny outside here in London, as a result of which volume down by around, let's call it circa 50%. The Stock 600 is, though, a little higher. I think this is probably post-payrolls. I think there is a sense maybe that the market is now anticipating that we see a dovish taper from the Fed. We'll get news on that, obviously, as we work our way through the next few weeks. This week is all about the ECB. Commodities very much in focus as well, though. Brent down by around 0.4%. The Saudis are selling crude a little cheaper out in Asia. But to be honest, the real action in the commodities market is elsewhere. It's in iron ore, it's in aluminium, aluminum, if you're up early watching in the United States. So let's talk about what else is happening in these markets. As I say, it is a quiet session, but there are a few things that are worth noting. Emma Chandra's here with the details.
Thanks very much, Guy. Of course, you mentioned what's happening there in European equities, actually inching towards another record high. Some pretty strong gains across the continent. The Stoxx 50 gaining as much as 0.9%. But I wanted to take a little bit of a look under the hood of the Stoxx 600. We should be able to bring up the GRR function on the terminal. This shows you what all the industry sectors are doing for the Stoxx 600. We're looking at a majority of them in the green. It is really tech, though, that is doing the heavy lifting, up close to 1.8%. Also, consumer goods doing pretty well. And of course, insurance. When you look at the laggards, we're looking at real estate and utilities. They're not doing very well. If we turn to look at that other big story of the day, you mentioned, of course, aluminium hitting its highest in more than a decade. We should be looking at a year-to-date chart here for aluminium. And that just shows you how high it had traveled already this year. Of course, on that back of the unprecedented global stimulus. Of course, the moves today from that political unrest, of course, that we're seeing in Guinea, the West African nation. There, the concern is about the supply of bauxite, key to making aluminium, and investors very worried about how much bauxite China is going to get. It gets some 55% of its bauxite from Guinea, and that is key to making aluminium. Let's finally move over to a few other movers for you. You mentioned iron ore there as well. I also wanted to bring it up. Down there, looks down 2.5%, sinking this on steel output curbs coming out of China and the worsening demand outlook for steel. Also wanted to look at the Aussie dollar. That's declining, doing its worst in more than a week. Elevated concerns about COVID there. That's weighing on sentiment. Of course, we get a central bank decision from Australia tomorrow. Finally, looking at Bitcoin, look at that, 51,000 it's trading at there. It becomes legal tender in El Salvador tomorrow, Guy.
Yeah. I noticed that. I thought that was quite interesting. I wonder if there will be other countries to follow. I think we'll migrate to aluminum later on the day as the US wakes up. We'll start with aluminium, and then we'll go from there. Emma, thank you very much indeed. As we've already mentioned, the recent US jobs reports, a little bit of a miss Friday. Very much brings into question the Fed's taper timeline. Hiring downshifting abruptly in August with the smallest jobs gain in 7 months, though wages were a little higher. Here is some of the reaction that we've got here at Bloomberg to that number.
It was a materially lower number.
It's a weaker report.
The first read is definitely this has some Delta variant on it.
This is the long game right now coming out of a worldwide pandemic.
There's one huge red flag for me in this payrolls report.
The hospitality number and the restaurant number.
0 jobs were created in leisure hospitality.
We had almost 0 gain this month in that area.
You'll get some bounce back here in September.
The market's looking through this and seeing, hey, this is temporary.
Tapering is still very much on the table.
The Fed is going to taper.
The market is now pushing back any sort of Fed taper announcement to November, maybe December.
They don't need to rush into it. And the most important thing not to lose sight of here is the emphasis that tapering is not tightening.
We'll see. Let's get some more reaction to this. Another voice into the mix. Neil McKinnon, VTB Capital Global Macro Strategist. Neil, what did you make of the number? It was a big miss. In some ways, you could argue it almost points to stagflation, i.e. wages are going up, but lower growth. But give me your thoughts.
Well, it was certainly disappointing. I mean, the ADP private sector numbers that came out Wednesday gave us a pretty good steer to what the Friday outturn might be, and it did suggest there would be some disappointment. But I think that as far as the Fed is concerned, this is slightly worrying. It may well bounce back next month, who knows? Yep. But a lot of the jobs growth was concentrated in the leisure hospitality sector, participation rates, some of the things that Jerome Powell looks at hadn't really shifted. Wage inflation is, I think, becoming more of a problem. You know, we've had, I think, the last 5 months gains of 0.5% per month in average earnings. Now, that could present a problem for the Fed at some point, and raise these worries about stagflation that you just mentioned.
So what does it do in terms of the timeline? There was an expectation that maybe we would start talking about tapering over the next few months. We would provide the details, we will get the details of it from the Fed. Do you think we're now pushing that into next year?
I think there's a good chance of that. I think there's an outside chance it might not even happen at all.
Wow, okay. Why would you, okay, let's just talk about that tail risk. Why not?
Well, I think, you know, the view in the markets is there will be tapering. Fed Chair Jerome Powell has suggested that even though he's not given a timeline, that will happen. We don't know the numbers on that, and we know there's some Fed presidents who have been pushing for an immediate taper because of concerns about what they see as overheating or inflation or whatever. But I think that Fed Chair Powell is going to proceed quite carefully on all of this, and I think from the market's point of view, there is a possibility that if they're expecting a taper, they may have to revise that. We're seeing cyclical downturn in the US economy across many indicators. You know, if next month's jobs report just confirms that last Friday wasn't a blip, then things will change. And I do think we should consider, you know, as investors, as economists, the possibility that, you know, the Fed might have to abandon the prospect of tapering altogether.
Well, the Delta variant was obviously being seen as largely responsible for the data that we just got. The crystal ball for the next few months when it comes to Delta is really quite opaque at the moment.
Absolutely.
We've got relatively high numbers, both here in Europe and over in the United States. We don't know how that is going to progress. If we remain with these relatively elevated numbers, does Delta continue to exert such a great influence on the employment prospects of the United States? Or as we go back to school, as we get through Labor Day and people start to maybe think about returning to the office, we end up with a more normal trajectory?
I think it's a big unknown, and I think it's very difficult for any of us to say with any degree of certainty what might happen. There's always the risk that the Delta variant could get worse. But I think from the vantage point of, you know, where is the US economy going to, the global economy going to? If we look at what's happening in many Asian economies that have been affected by the virus, affected by supply chain disruptions, you know, there's already widespread evidence of a downturn in activity in many Asian economies, not least of which is the Chinese economy.
Sure, yeah.
And that is very important. You mentioned just moments ago what's been happening to commodity prices. That's a key factor that's related to what's going on in China. So we could have a little situation where both America and China are slowing down at the same time. We've got a situation where the Chinese central bank is looking to tighten up from a regulatory point of view, whereas the Fed wants to continue with a very accommodative policy.
What does that tell us about where we are in the cycle?
Well, I think that's a very good point. I mean, I think for the first half of this year, if you'd have asked any economist that came onto your show...
I did, lots of times.
The story would have been of synchronized, sustained economic growth, gangbuster global GDP numbers, all look tickety-boo. And then all of a sudden, as we transitioned into the second half of this year, economists became a little bit more downbeat because some of the numbers, activity numbers, were not as strong as expected. Lots of downside surprises to the data, which is what we're still seeing. So I think it's fair to say the consensus view is, yes, we think there is a cyclical slowdown taking place. It's probably temporary. We're looking for a bounce back is the consensus view. And so the Fed, at some point later in the year, November, will be able to implement some sort of taper. But I think there's a good chance that's not guaranteed at all. I think, you know, we need to see going forward through sort of September, October data, just exactly what the situation is.
There's a lot of confusion in Washington about whether or not we're going to see the full range of Biden's aspirations when it comes to fiscal policy realized. Joe Manchin, apparently sort of persuadable on the 3.5, but we'll wait and see. Trillion, I'm talking here. We may get the first package. We may not get the second package. If we get a lower number in that second package, say we get 1.5, say we get 2. How does that change the calculus for the Fed, do you think?
Well, I think it does change it. I think that actually Fed Chair Powell is aware of all these things because As we go into October, there are the debt ceiling issue again. There's also a lot of the sort of people, economists who've been monitoring what contribution does fiscal policy make to US economic growth, are showing that the so-called fiscal impulse is actually starting to fade. In other words, we've seen the best of what fiscal policy can do in terms of its impact on the US economy. And going forward, particularly into 2022, that fiscal impulse starts turning negative. And we're seeing politically it's very difficult for President Biden to push through totally what he wants. There will be a compromise. But for 2022, doing much more in terms of fiscal impulse is going to be very, very difficult. And that's when a cyclical slowdown could easily translate into something that's a little bit more worrying.
Neil, stick around. We need to talk about this through another lens, and that is what is happening with the ECB. We'll do that next. Neil McKinnon, VTB Capital, is going to be sticking around. Also, we're going to hear from the CEO of Daimler. Olli Kalenus is going to be coming up as well. That conversation coming up. This is Bloomberg.
With the First Word News, I'm Angel Feliciano. The price of aluminum climbed to its highest in more than a decade following a military coup in Guinea. The West African nation is a major exporter of bauxite, the raw material used to make the metal. The head of Guinea's special forces says he took action to address financial mismanagement and corruption. The Taliban said the international flights from Afghanistan will resume shortly. Both Qatar and Turkey are helping restart operations at Kabul's airport. Restarting international flights and allowing safe passage to Afghans who wish to leave are key to the Taliban gaining legitimacy overseas. Banks are warning they're not ready for the European Central Bank's historic climate stress test next year. That's according to a survey of the major European banks conducted by Bloomberg. It's the latest sign that the finance industry is struggling to adapt to Europe's ambitious goal of steering capital away from polluters. The CEO of Volkswagen fears that the global chip shortage may last for years. Herbert Diess told Bloomberg that semiconductors are in high demand and it will take time to ramp up capacity. The chip shortage has been constraining auto production around the world. And traders returned to the London Metals Exchange iconic open outcry trading floor today for the first time in 18 months. It's closed because of the pandemic. Traders fear that volumes will be sharply lower than before the floor was closed last year. Plus, an outbreak of the coronavirus could use it to close again. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Angel Feliciano. This is Bloomberg.
What's happening on Wall Street?
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
I support the new framework.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Are you still committed to the U.S. pickup market? You mentioned how small it is, and I know you do good business at Frontier, but a lot of times Americans want something bigger like the Titan. Is that, do you plan to stay in that market as competitive as it is?
I mean, for us, market is one thing. The second is what customer aspires for from Nissan. And customer in United States aspire for sedans, SUVs, and the pickups. And Titan is a great pickup truck, and we are, of course, focusing on the Titan. But as I said before, that in our whole lineup, our main focus is always been in the sedans and SUVs and the smaller pickup truck.
Power of Bloomberg.
Let's get the session started and wrap up the trading week.
News.
Who knew that one earnings story could take the entire market? There's upward pressure on wages.
Analysis.
This is really a slow, ongoing implosion.
Context.
Is there veracity to this granular data of ADP?
It's an ugly report. The power of the Bloomberg terminal. The power of Bloomberg television and radio.
Tesla's the one that we got our eyes on.
Bloomberg has it covered.
There is wide disagreement on whether we've seen the worst of the Delta variant in terms of the upsurge in cases. Where do you fall on that?
So I see that the curve is continuing to go up, which is worrying. What's making me really nervous today is that there is this accompanying surge in deaths as well.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Minutes past the hour. This is Bloomberg Markets. Let's talk about those markets. I'm Guy Johnson. It is Labor Day over in the United States, as a result of which volume has been quite light this morning here in Europe. We're down by around circa 50%. The afternoon could get even bleaker from a volume point of view. It's also quite nice weather outside here in London. Maybe people are factoring that in as well. We're kind of in the middle of a new range now for the Stock 600. We were 450, 460. We're now kind of 460, 470, kind of up towards the top of the 470s. So 475, we're kind of mid-range now. We're up around 0.7%. As I say, volume is light, but actually it feels quite a positive session. If you take a look at the way that the sector breakdown works today, I think this is a post-payrolls reaction. And US futures are kind of pointing to a fairly positive story as well. The dollar's actually on the front foot. Now, this is ECB week. Last week was payrolls week. This is ECB week. 118.64. I think it's the first time in 5 days we've got the dollar on the front foot. 118.64, as I say. We're only down for the euro by around 0.1%. Brent crude also a little bit on the back foot. The Saudis are selling crude out in Asia a little bit cheaper. Not by much, but it's a factor in the market today. The commodities area actually is probably the most interesting space this morning from a market's point of view. Aluminium up by 1%. There has been there's a potential coup taking place in Guinea. Huge producer of bauxite, supplies around 50% of China's bauxite, which ultimately becomes aluminium further down the production line once you've applied a lot of electricity. And this is certainly something that I think will be worrying the Chinese. It's also going to be a factor for the car industry as well, which is dealing with supply shortages on a number of different fronts at the moment. Obviously, we've been focusing a great deal recently on what's been happening with the chip sector. That's been a huge problem for the cars producers, for the truck producers. Munich is kind of the epicenter of all of the action this week on this story. Daimler's CEO, Olli Kallenhuus, a little earlier on speaking to Bloomberg's Matt Miller, who's very happy today. He's out of the IAA Motor Show, which is now finding a new home in Munich, talking about the EV transition, talking about the chip shortage, talking about the supply chain problems that this industry is now facing.
We are accelerating our path towards full electrification, and in fact, we're really going to go for it and see if we can convert our whole portfolio to fully electric by the end of this decade. That's why we have brought 4 world premieres with us to this show. the beautiful EQE, the first AMG based upon the EQS, a Maybach, sophisticated luxury, an SUV, and as well as the fully electric G for the G-Wagon fans.
Everyone's very excited about the fully electric G-Class. There's going to be an AMG version as well, I read. I'm not sure if that's confirmed. Tell us about it.
We hinted yesterday at what the drivetrain will look like with 4 individual motors close to the wheels. All I can say at this point, it will be insane. So you have something to look forward to.
What about sourcing the batteries? How difficult is that? Do you have to scramble to get supply before your competitors eat it up?
We have sourced our needs more or less up to 2025 or maybe a little bit beyond that. But with this new accelerated strategy, trying to be ready for 100% electrification by the end of the decade, we are now upping the ante, talking to our partners, and we're also close to announcing soon a European initiative on the battery cell side as well.
So you've got to get more supply then, and I assume across different parts, materials, chips, especially, this has become an issue. How is the supply chain bottleneck affecting you?
Well, you have to go all the way down through all the tiers. And going into electrification, we're doing this in our operations around the world. So it's converting in Europe, in Asia, in North America. So we're talking to our partners about covering supply for all of those production plants that we have around the world.
And when do you see relief in terms of the chip supply? When do you see that opening up again?
In terms of the chip supply, we're hoping that this Q3 this year, which has been hampered by mainly close downs in Malaysia, that is the trough and that we can start to get back up on track again in the fourth quarter. But structurally, it's something that the chip suppliers and the wafer producers are telling us will be with us to an extent also next year.
You've been allocating your parts to your higher margin products, right? Are you able to keep profitability high with that strategy?
We always have a dual perspective when you have a constraint like this. Of course, the customer, and make sure that we keep the waiting times as short as we can, but also looking at the health of your profitability. So in a balance between those two, we're trying to navigate through this constraint as best we can.
There's no shortage of demand now. How long does that hold? How long does this big demand stay on?
We have tremendous demand for the Mercedes-Benz product portfolio, and this is something that even has nothing to do with COVID or any production constraint. We have the best portfolio ever, so now we're in a situation where this constraint meets probably the highest demand that we have ever seen.
Ola Hallanus, the Daimler CEO, talking about Miller. Matt's going to be back a little bit later on. He is, as you may have gathered by that conversation, a massive fan of the G-Wagon. I'm not sure how he'll take to it being electrified. We'll discuss that later on in the program. But the issues in that conversation, I think, are very germane broadly to what is happening with the global economy. What we're seeing at the moment are shortages both in terms of materials. For the auto sector, it is a chip story. Maybe it'll become an aluminium story as well. There's also obviously a wage factor, which we're increasingly having to deal with. That sort of second derivative, which really starts to alarm central bankers because it's just a little bit more sticky. Neil McKinnon, VTB Capital Global Macro Strategist, still with us. That's the problem, isn't it, right now, Neil? It's what central banks are having to factor, and I think they're really struggling with it, is we clearly don't know how transitory some of the effects are going to be. Labor's a little stickier when it starts to become embedded than maybe some of the material shortages we're seeing. Ultimately, that chip shortage will roll off. But what we're increasingly hearing is it's going to be longer than we originally anticipated.
Well, it was very interesting to hear that you know, certainly Q3, Q4, we might see some easing back in that. But as you said, 2022's not going to be an easy ride. And I think the supply chain problems that have been a key thing for the global economy, for all the major economies, is still going to be there. And so for the central banks, it presents them with a dilemma. On the one hand, we're seeing inflation pressures, and they're hoping it will be transitory, although that's never been properly defined. We also don't know what the pain threshold for the central banks are. Obviously, they're willing to tolerate some sort of overshoot. All the major central banks are willing to do that. But how far does that overshoot then translate into a worry that they may be losing control? So handling that problem while at the same time ensuring that your economy stays on track is it's going to be very, very difficult for the major central banks.
Just in 30 seconds, ECB Thursday, event, non-event?
Well, normally they're a bit of a snooze fest, if I can say that, ECB meetings. This one could be a little bit more interesting because some of the ECB presidents, particularly in the northern creditor bloc, are talking about a taper. So we might have a situation where the ECB tapers before the Fed. So it's going to be interesting on Thursday.
Neil, we'll look forward to it. Thank you very much indeed. Neil McKinnon, VTB Capital Global Macro Strategist. Coming up, we're going to turn to FX. ING's London Head of Foreign Exchange Strategy joining us next. This is Bloomberg.
China has been focused for a long time now on catching up to the United States in space when it comes to space exploration, and they've really made a couple of really impressive achievements. For instance, in May, China landed a rover on the surface of Mars. It's only the second country after the United States to manage to do that. In June, China sent astronauts to its space station, which is still under construction. China is not part of the International Space Station because the United States worked to exclude China from that. But instead, the Chinese are working on their own. That's scheduled to be in full operation, I think, next year. The Chinese have really come a long way in space. That said, all of that's run by the Chinese government. There is a role for Chinese companies to play in the space program. They're not being as front and center, say, as Elon Musk with SpaceX or Jeff Bezos with Blue Origin. China's companies are playing a more supportive role, I think it would be a fair way to say it, working on things like satellites, rocket launch operations. They're leaving the really big, sexier items when it comes to space exploration, leaving those to the Chinese government.
Somebody said, I want to be the next Reid Hoffman. What would you say is the best training ground to do that?
Well, I'm still young enough that I'm still hoping to be the next Reid Hoffman myself.
The growth story in cannabis remains very strong, even after the sort of loosening of the pandemic. There was a worry that there might be wallet spend competition, but so far the cannabis sector seems to be holding up very strong.
So we're approaching half past the hour. This is Bloomberg Markets. I'm Guy Johnson. Let's check and figure out exactly what is happening today. I think the first thing to say is that there is not a lot going on, particularly from an equity point of view. But the details are all important, and we probably should ask Emma Chandra what exactly is going on. So let me hand things over to her.
Thank you very much, Guy. Yes, let's take a look at what is happening when it comes to European equities. Of course, we are seeing some big moves, but on low volume, of course, because it is Labor Day in the US. And so the markets there are closed and investors hopefully taking a bit of a break before they get back into the back-to-school swing of things for September. Looking at the stocks, Europe 600 gaining some 0.7%. Gains across the board for Europe. The FTSE 100 also up 0.6. The CAC 40 up 0.8%. But what I wanted to talk to you about was a bit of a luxury themed advance we're seeing for stocks that's emerging. For the FTSE 100, we've got Burberry, one of the biggest movers for the FTSE 100 today, up around 2%. Now, it is, of course, a rumoured takeover target. We have been hearing a lot about how British companies have been very popular among those looking to take over companies. And in fact, the UK, one of the best markets for that this year. But also the CAC 40, we've got LVMH, we've also got Hermes, we've got Kering, the owner of Gucci, also gaining around 2% today and all doing pretty well. And what we're showing you here is LVMH over the course of the last month. And then we saw investors really get out of the stock in the middle of August. And this is largely to do with China and the announcement of that common prosperity policy. A lot of investors rattled by that. Today, we're seeing this move higher, and this may be on the back of a bit of a more nuanced analysis from some analysts. Certainly, we're hearing from the likes of Brian Garnier, the analyst over there, saying that it shouldn't be seen that this policy is going to affect all luxury stocks in quite the same way. And also what is more important about the common prosperity policy in China is that it's about expanding the middle class for all. And as a whole, that is good for the luxury sector. That also echoed by the likes of Berenberg as well in a separate note. And so we are seeing that move in luxury stocks today. Pretty interesting, Guy, of course, on a day when we're not seeing, as you said, so much happening. Finally, we have been talking a lot about aluminium. I'm saying it right this time, Guy, despite 5 years in the US. Aluminium, of course, hitting that highest price in some 10 years. So I wanted to talk about some of the stocks that, of course, are moving off the back of that. We saw a lot happening over in the Asian session, but also we've got Norsk Hydro, that gaining around about 4%. Big aluminium maker. Also, Granger's also gaining around 3%. We've also been talking about iron ore slumping today, and that's not being so good for Anglo-American, down some 0.5%. Guy.
Emma, thank you very much indeed. We'll come back to the aluminum story later. Let's turn to British politics right now. The UK Prime Minister Boris Johnson set to speak a little later today in the House of Commons. The Commons is back. He is returning to Parliament, very much facing a backlash from members of his own Conservative Party over reports that he is planning to hike taxes on British workers to pay for social care, which is experiencing something of a funding crisis right now. Joining us now to discuss all of this, Bloomberg's Emily Ashton. Emily, Boris is going to have a fairly tough day today in the House of Commons. Not only is he having to deal with the fallout from Afghanistan, but he's now having to deal with this funding crisis. Walk me through how the argument is working within the Conservative Party. Social care needs more money. The question is it paid for by national insurance or via tax hikes?
Yeah, I mean, social care is something that Boris Johnson has pledged to reform, as Prime Minister after Prime Minister has pledged and never actually got round to doing. He really wants to do this. He doesn't want COVID to overshadow his premiership. He really wants to get on with it. But the trouble is, he's also promised not to raise taxes. You really can't do both. So with reports are showing that they are considering behind the scenes this national insurance rise. But that will clearly hit the younger workers, those who've been affected by the pandemic the most, to protect the elderly people mainly and help them keep their homes. And lots of MPs in his party don't think that's fair, and there may be a fairer way of doing it. I don't think we'll hear the details of that this afternoon, but that may well come tomorrow, and that will lead to a showdown, yes, in his first week back in Parliament.
Is the solution to this problem to fund the increase in social care via a rise in income tax, which does affect pensioners if their pensions are big enough, and therefore they will contribute ultimately to some of the funding for social care, i.e. it becomes more generationally easy to manage?
Yeah, I think that could be something that they're mulling over. I think the reason that they turn to national insurance sometimes is because psychologically in people's minds, people think of it as sometimes even separate to a rise in tax. and they see it as kind of earmarked for health, and maybe it's a bit more palatable to voters. So there's all these things floating around, but you're right, national insurance is not paid by those over state pension age, and that's why a lot of the MPs think that's unfair. And Labour, the opposition party, have already said they would not support that rise in national insurance.
Some within the Conservative Party also feel that actually the fiscal numbers aren't actually as bad as maybe they're being shown to be right now. There's certainly some from the right of the parties that are suggesting actually the fiscal position is much better, and as a result of which there will be no need to do any of this. How realistic a prospect is that?
Yeah, we see reports of that, and maybe some good news that Rishi Sunak can unveil later this year in the autumn statement. But I think social care is something, whether it requires this cash boost or not, it requires fundamental reform. Things aren't right in that system. It also requires, away from the money and the cap on care costs and how much people need to spend, it's about, this is what campaigners have been telling me recently, it's about recognising carers themselves and how much they are paid and respected. It's about getting workers back. This has all been affected by other factors like Brexit as well. So it's a huge thing to reform, and it's not just about a cap on care costs to fund.
Yeah, a huge shortage of workers in that sector at the moment, which is obviously manifesting itself in very difficult conditions in some of these care homes. Emily, thank you very much indeed. Bloomberg's Emily Ashton. Let's carry on the conversation and turn to it from a different angle. We are clearly watching, obviously, the fiscal monetary debate heating up. We are starting to see the effects of increased fiscal spending in Europe manifesting itself in the numbers. Finance ministers and economy ministers from across the European Union gathering this weekend on the shores of Lake Como for the Ambrosetti workshop, weighing in on the risk posed when it comes to inflation. We're obviously seeing a huge amount of money pouring in to the economy. There is a huge amount of demand as a result of that, but the supply side not keeping up. This is what they had to say from the shores of Lake Como over the weekend.
I don't think that it should come as any surprise that there is a spike in inflation right now this year.
We are not concerned by the current level of inflation in the EU or everywhere in the world.
Inflation is very much influenced by energy prices and food prices.
All the institutions consider that it will be a transitory feature, and we have to avoid that it becomes structural.
We think that this increase is a temporary one.
We are monitoring it, and we should monitor it very accurately, but without going to conclusions too soon.
We remain vigilant, but we are not concerned.
It is a natural feature of a very strong recovery that we're witnessing.
What does that mean for the ECB this week? What does that mean for Christine Lagarde? Chris Turner, ING's London Head of Foreign Exchange, joining us now. Chris, we have an interesting meeting coming up with the ECB, which is a little bit of a surprise because they're not always that interesting. We're starting to hear the hawks voicing their concern about the inflation prints that we are seeing right now out of the Eurozone. Do you think the ECB in its entirety will be listening to those concerns? Do you think we're actually going to see any change coming out of the ECB this week?
Yeah, our team's view is certainly that that the ECB perhaps wouldn't want to be positioning themselves as tapering before the Fed. I think they're very pleased with what was the weaker euro in late July and early August, even though the euro has since kind of bounced back. But yeah, we think they want to be sort of pretty careful about how they kind of communicate their policy. Yes, the PEP scheme is a pandemic scheme, and the hawks, as you've addressed, I was mentioning kind of earlier, have been sort of worried about whether that needs to be continued given the state of where the pandemic is. But overall, though, we think even though the euro might stay bid into the meeting about expected event risk, that afterwards, though, that the ECB won't take that step and reduce the PEP amount.
What's the upside on the euro right now? We had a flirt with 119 last week. Any sense that that kind of strength could be sustained?
Yeah, I think it's probably sustained into Thursday. So speaking to our FX options traders, they tell us how the market is pricing various event risks. And for ECB day, it's normally about sort of 50% for above normal volatility, which is price this week, maybe sort of creeping a little bit higher. We've also talked about the German elections, and again, that's only sort of 30-40% above kind of normal. But I would say, to answer your question, I think Eurodollar can stay bid, but I think it'd be hard to break 119 on a sustained basis probably before Thursday.
Chris, do you think the German election is going to be in any way a volatility event? At the moment, it looks like that is not going to be the case, but we don't know what the final sort of traffic light is going to look like in terms of the coalition. My kind of feeling, certainly from talking to people at the moment, is nobody seems particularly excited. Could that change?
Yeah, as I mentioned, the FX options market seems quite relaxed about this, but yeah, the kingmakers out there, the FDP, what price they demand for their kind of rolling kind of coalition. Obviously, the SPD are doing sort of very well in the polls at the moment. The market, as you say, is quite relaxed about this, but I think we've still got a couple of weeks to go until the election, and I think probably some more event risk probably could be priced in, particularly were the SPD to pull away any more, giving them a greater say in any future coalition.
Chris, if we see tax rises in the UK, what impact could that have on sterling?
Yeah, I was looking at what's priced into sterling money markets at the moment, and because of the Bank of England communication, the terminal rate, you know, for the bank rates are priced out over kind of future years. The market really struggles to price that above like 0.5% at the moment, thinking that the Bank of England will turn to quantitative tightening, actively trying to shrink its balance sheet in terms of the BOE tightening cycle. And I think it might be interesting as we approach the autumn statement, any suggestion that there will be sort of tax rises or trying to sort of fix the kind of fiscal holes, I think probably could weigh on sterling at a difficult time politically as we look to the end of the month and those deadlines expiring on Northern Ireland trade, for example.
Chris, the market's pretty short Aussie dollar. Any chance that we get a surprise out of the RBA that could shake that up?
Yes, you're very right. One of the biggest shorts out there at the moment is Australia, the Australian dollar on the back of the sort of Chinese slowdown and obviously kind of lockdowns kind of locally. I think the market probably is sort of positioned, as I say, slightly dovishly. If they stick to their tapering, although it's a tiny tape, they're only talking about reducing their purchases from about 5 billion Aussie to 4 billion. But I think even sticking to that, even being sort of resolute to a tapering, I think you could see some modest Aussie upside. But China, you're mentioning earlier, kind of China, we've got this big, question mark about what's going on with Chinese activity, further kind of rate cuts. So I think if there is a bit of a short squeeze in Aussie dollar, perhaps it won't last for too long.
Chris, always a pleasure. Nice to see you. Thank you very much indeed for your time today. Chris Turner, ING's London Head of Foreign Exchange Strategy. Thank you very much indeed. Coming up next, we're going to take you back to Munich. The Auto Show is underway. We're going to hear from part of our conversation, or Matt Miller's conversation, with Volkswagen's CEO, Herbert Diess, talking about a kind of elongated chip shortage hitting this industry. This is Bloomberg.
After 16 years in power, actually, remains one of the most popular, if not the most popular, German politician ever. Who's the right person to fill those shoes?
Well, whoever is going to be filling those shoes is going to have a very hard time. Look, as the Merkel era ends, most of the certainties which we Germans, during 16 years of Merkel, tended to take as forever are evaporating before our eyes. The eternal assurance of the United States always protecting us, that's gone out with Donald Trump. The certainty that we will build an ever closer union, the EU, has gone out of the window with Brexit.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
The moment Neptune was discovered, everyone wanted to do it because it was this clear demonstration that you can use math to discover objects.
Unfortunately, since then, no major planet in our solar system has been found. But thanks to modern telescopes, thousands of smaller objects have been discovered in the past few decades beyond Neptune, called trans-Neptunian objects, or TNOs. And planetary scientists at the California Institute of Technology have noticed some anomalies with these objects. Their hypothesis? A giant theoretical planet beyond Neptune, Planet 9. And thanks to a new telescope, equipped with the largest digital camera ever built, we may be one sky survey away from finally finding it.
With the First Word News, I'm Angel Feliciano. U.S. Secretary of State Anthony Blinken flew to Qatar for his first overseas trip since the Taliban takeover of Afghanistan. Qatar is a major American base. It's been a gateway for thousands of people airlifted out of Afghanistan. Blinken says he'll express his gratitude for all that Qatar has done to help the evacuation refugees. Hurricane Ida has had a greater initial impact on Gulf of Mexico oil than any other storm in history. Ida has been responsible for the loss of 16.8 million barrels of output in the 10 days since offshore platforms were evacuated. That's 32% more than Hurricane Katrina in 2005. Still, prolonged disruption caused by Katrina and Hurricane Rita the same year led to the deferral of more than 160 million barrels of oil production. The Biden administration is feeling confident it can persuade a key Democratic senator to support the president's $3.5 trillion tax and spending package. Last week, Senators Joe Manchin demanded what he called a strategic pause in the White House economic agenda. But the president's chief of staff told CNN that Manchin should be persuadable by the argument that the package adds nothing to the debt. It was a record-breaking weekend for the first Marvel film featuring an Asian superhero. The Disney movie Shang-Chi and the Legend of the Ten Rings took in more than $71 million at theaters in the U.S. and Canada. That blew past estimates and was the biggest opening for a movie over the Labor Day weekend. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Angel Feliciano. This is Bloomberg.
This is Bloomberg Markets. I'm Guy Johnson in London. Let's take you back to Munich. The semiconductor shortage will probably last a few more months or even possibly years. That's the view from VW's CEO, Herbert Diess. He spoke to Bloomberg's Matt Miller earlier today at the IAA Motor Show in Munich.
We need time to get electric, because we need the capacities, the plants for the battery cells, and that will take time. So we are running at probably 6%, electric car sales worldwide. In Germany, 20%. In some of the countries, already 70-80%. Norway, Sweden, Holland. And it depends a lot on the local policies, and where the policies are in place to change, we are very fast. Could we be faster? Not a lot, because the supply chains for batteries, for the new technologies, the capacities we set up are such that we are fully booked, and we hope to continuously grow, but until 25, we are aiming at 20-25% EVs, which will be a tough target because of the supply chains.
But you need to double your sales. You're going to double your sales of electric vehicles every year?
Exactly,
In terms of the semiconductor shortage, it looked like for a moment it was going to be a bottleneck issue and then come back, and now there's a double dip. How does that play out?
Yeah, we expected, actually, you're absolutely right. We expected after the summer break a relief situation as we set up a lot of recovery plans and bought additional capacity. But we suffered a setback mostly through COVID, because in Malaysia was hit hard by COVID, the back-end plants of our semiconductor manufacturers. And that hit us hard. We hope to overcome this new situation towards the end of this month, probably next month, and then recover in the last quarter of this year. But as you said, always it was after the first quarter, after the second quarter, third quarter, overcoming those really crisis issues. I think probably we will remain in shortages for the next months or even years, because semiconductors are in high demand, Internet of Things is growing, and the capacity ramp up will take time. So it will be probably a bottleneck for the next months and years to come.
Herbert Diess, the CEO of Volkswagen, talking to Matt Miller a little bit earlier on in Munich. Let's go from cars to aeroplanes. Singapore, the latest jurisdiction to lift a ban on the Boeing 737 MAX. The plane is now legally allowed to fly in and out of Singaporean airspace. This was obviously after it was grounded globally back in 2019. Young-Hee Park, Bloomberg Aerospace reporter, joining us now. How significant is Singapore? What I'm really waiting for is China.
Well, this is definitely significant, given that, the flag carrier, Singapore Airlines, has a major sort of exposure to the MAX, and was hoping to use that plane to open up new routes before COVID happened. So this lift is good in the sense that neighboring countries like India, where the plane will be most likely to service, and to Malaysia, they've also ungrounded the plane. So, once travel comes back, we'll probably see the airline fly more of the MAX to these destinations.
How many does Singapore have?
Sorry?
How many MAXes does Singapore have? I'm just curious, Singapore Airlines, how many MAXes does it have? I'm just wondering how quickly they can put the aircraft into operation.
Yeah. Right. They have 6 planes at the moment, but they had basically flown these planes out of storage in Australia while they were grounded. But before this, Singapore Airlines was revamping the cabin to get ready for the re-entry of the planes into service.
When are we going to see China giving the green light to the MAX?
That your guess is good as mine right now. I think a lot of attention is sort of centered to see when it's lifted. But as in cases, it really depends on how the regulators over there sort of think about it. And we hope it's soon, because it is a major market. But your guess is good as mine at the moment.
Young-Hee Park, thank you very much indeed for the update. gradually moving eastwards in terms of the recertification of the max. Okay, that wraps up this hour. Coming up next, Peter Chatwell, Mizuho International Head of Multi-Asset Strategy. Looking forward to that conversation. We'll look back to the payrolls. We'll look forward to the ECB. That conversation coming up next. This is Bloomberg.
I'm Andrew Krasny with an exclusive U.S. Open update for Bloomberg TV and radio from Tennis Channel. Leylah Fernandez hit the headlines again on day 7 at Flushing Meadows as she reached the quarters at a major for the first time. The 17-year-old fought back from a set and a breakdown to stun former champion Angelique Kerber in 3 pulsating sets on Louis Armstrong Stadium. After coming from behind to take out former world #1 Naomi Osaka in the 3rd round, Fernandez produced an almost carbon copy of that performance to continue her Cinderella run in the Big Apple. The Canadian fired 45 winners past the German in the victory, closing it out 6-2 in the deciding 3rd to set up a meeting with the #5 seed, Alina Svitolina, in the Elite 8. And don't forget, you can watch all the action from New York every night on Tennis Channel. I'm Andrew Krasny.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Monday the 6th, 2 p.m. in London, 10 a.m. in New York, Labor Day in the United States. From London, I'm Guy Johnson. Welcome to Bloomberg Markets. We have a quiet session in some respects. Equities are higher, but volume is light. Let's get the details now with Bloomberg's Emma Chandra.
Yes, it is a low volume day, but we are seeing stocks rising and in some cases records rolling. Guy, let's take a look at what has happened throughout the session. Let's start in the Asian session with the Nikkei gaining some 1.8% there and hitting a 31-year high. We're seeing stocks rise then in Europe. Got the stocks Europe 600 gaining some 0.6% and inching ever close to its record as well there, Guy. And that is the same across Europe, seeing a lot of gains across European markets. You mentioned there, it is Labor Day in the US. US markets are closed, but futures are open, and we are looking at some slight gains there, up some 0.2% for the S&P 500 futures markets. We'll see what that translates in tomorrow when everybody returns to work after the official end of the summer. Can you believe it? We are into autumn, or if our American colleagues were here, we would call it fall. Now, we should be able to show you how things are looking across Europe. We should be able to bring up the maps function. That will show us how markets are performing in the various markets across Europe. Don't think we have that, but anyway, we are looking at strong gains across Europe there. We're seeing luxury leading the way when it comes to the CAC 40. That's in France. We're also seeing some of those takeover targets in the UK for the FTSE 100. They're doing pretty well. The likes of Burberry gaining some 2%. The other big story of the day, Guy, that is aluminium. We saw it hit a 10-year high. We are looking at a year-to-date chart here for aluminium. I wanted to show you that to show you how it has been gaining amongst all this unprecedented stimulus throughout the year. Then, of course, today we get this political unrest in Guinea. That's a state in the west of Africa. The concern there is about the supply of bauxite, really key to producing aluminium. And the concern for investors is whether or not China, one of the biggest aluminium producers, of course, will get enough of that bauxite. And that's why we're seeing aluminium prices spike today. And of course, we're also seeing some of those aluminium producers also spike when it comes to the markets. Not doing so well when we look at the other commodities, like likes of iron ore, actually sliding. Look at this. We're now finally looking at some red on the screen, down some 3.4%. This, of course, after some steel output curbs coming out of China. When we also looked at oil as well, we're seeing that sliding after Saudi Arabia cut prices for some Asian customers. I also wanted to mention the Aussie dollar. Of course, we've got a key monetary policy meeting tomorrow. That's been sliding too. Also, finally, let's talk about Bitcoin. Down now, had been gaining, but it was still really doing pretty well. The reason I wanted to look at it, of course, Guy, is, of course, it becomes legal tender tomorrow in El Salvador. So if anyone's going on holiday there, you might be able to buy things in Bitcoin.
Yeah, the use case has always been a bit of a mystery, but maybe we're starting to resolve that. Emma, thank you very much indeed. So some of the big events that we're watching out for this week, we are certainly paying attention to that RBA meeting Emma was just mentioning. Keep an eye on the Aussie. It's heavily shorted into that meeting. But the ECB, probably the big event. The central bank holding its September policy meeting Thursday. Inflation certainly in focus. Is inflation now high enough that emergency stimulus can start to be withdrawn? It was certainly a subject at the Ambrosetti Forum in Cernobbio, Italy, over the weekends on the shores of Lake Como. European policymakers very much they're downplaying their inflationary fears for the Eurozone.
I don't think that it should come as any surprise that there is a spike in inflation right now this year.
We are not concerned by the current level of inflation in the EU or everywhere in the world.
Inflation is very much influenced by energy prices and food prices.
All the institutions consider that it will be a transitory feature, and we have to avoid that it becomes structural.
We think that this increase is a temporary one.
We are monitoring it, and we should monitor it very accurately, but without going to conclusions too soon.
We remain vigilant, but we are not concerned.
It is a natural feature of a very strong recovery that we're witnessing.
A very nice place to hang out over the weekend, the shores of Lake Como. Joining us now to discuss the issue of inflation and how it pertains to the ECB, Peter Chatwell, Mizuho Head of Multi-Asset Strategy. Peter, the hawks at the ECB on the Governing Council are starting to get a little excited about what they see as a growing inflationary trend within the Eurozone. Do you think Christine Lagarde's going to pay any attention to them?
I think because we've had three prominent hawks talking to their domestic audiences in this way, and it was almost immediately after the 3% CPI print, then at least the market is going to be expecting that up until Thursday. And if we consider European financial conditions since the last meeting, they have indeed got easier. So there is less pressure on the ECB to keep things running at absolutely full pace. But the difficulty here that they've got is that if they're too aggressive in showing that they're reining things back or allowing things to tighten a bit in terms of a slower pace, then they risk it backfiring. So it's a very, very difficult communications challenge.
Will they want the Fed to go first?
I think we should differentiate clearly between, on the one hand, the European Central Bank may be slowing things down a bit temporarily before then to give themselves room to pick it up the next quarter, whilst the Fed is on the brink of, or getting closer to, slowing things down to stop their balance sheet expansion. The ECB is nowhere near stopping the balance sheet expansion. That's going to be years away.
So if that is the case, do we need to start hearing about how they're going to maybe restructure the APP, the kind of the pre-pandemic program, maybe to look a little bit more like the PEP, which was the emergency program, to give themselves a little bit more flexibility? Do you think we start to see some language around that?
Yeah, that's the key to this. And I think the clearest signal that this is in the pipeline has come from the chief economist, Philip Lane. He made reference a couple of weeks ago to how PEP was becoming less significant as a tool going forward, but also that the ECB, if there is more net supply of European government bonds and quasi-government bonds in issuance, then the ECB has the ability to do a larger than pre-pandemic norm of APP execution than would otherwise be the case. So this is very much like the ECB becoming committed to targeting financial conditions. And if there is larger government bond supply out there than there was in 2019, then they have the capacity to increase the APP accordingly.
One of the factors in the calculation here is going to be the German election, which thus far has not been that fascinating. When we get the results, and if it were to turn out that the SPD, along with the Greens, control the next parliament, is it likely that we're going to see more issuance, and that changes the calculation for the ECB in terms of the way that they need to manage this process because they'll have more bunds to buy?
Yeah, I mean, that's one example. I would think that given where we are, given how easy European financial conditions are and how many governments would be able to materially increase their fiscal usage, their issuance next year for no or negative cost, so i.e. to take advantage of the negative yields, then I would, if I were the ECB, I would be thinking and hoping that governments take advantage of these conditions, and therefore for the APP to need to be considering a significantly larger quantum than the current 20 billion that it's running at. It's got to be, in our view, looking more at something in the region of 40 billion, perhaps a bit more. But we've also then got to take into account that these programs are already large and their reinvestment flow is also very significant.
Peter, when we look at what is happening with the ECB and we look at what is happening with the Fed, as you say, they in some ways feel like they're on very different pages. The Fed has made it clear that tapering is not hiking. Do you think, and it's sort of a continuation of this conversation, do you think the ECB needs to even bother with that? I find it very hard to believe that anybody realistically believes that the ECB is going to be tightening anytime soon.
Well, trust me, there are people out there who continue to get wrong what the market got wrong in 2013. They do see tapering as tightening rather than basically a slower expansion of the balance sheet. So yes, I think the ECB should be very cautious in communicating this kind of slowing down, perhaps temporarily, of the purchases to avoid an unwanted an unwarranted tightening of financial conditions, which would threaten to undo their progress that they've made over the last 2 quarters, which was very impressive.
Peter, kind of taking a step back from all of this, the reason we're doing a lot of what we're doing at the moment from a monetary point of view is to deal with the effects of the pandemic. What is your assessment of what the situation is going to look like as we work our way into fall, autumn? We are running at relatively high rates for the Delta variant in many parts of the world at the moment. How cautiously do you think that central banks are going to be approaching this? Do you think that they are expecting in the Eurozone to be kind of on a steady trajectory out, or is there going to be a few bumps along the road, and therefore that implies even greater caution?
Yeah, I think that there is solid macroeconomic evidence that shows that when the number of cases rise, consumers become more cautious. We've seen that in a number of economies. So I think that the central banks will be looking at this sort of evidence, and they will be considering what the scientific community is projecting for future winter COVID breakouts, and also considering what if a new version of the vaccine is required, and what if that is slow to roll out, just as the current vaccine was a bit slow to roll out. What are those risks? So yes, I expect them, particularly because their inflation forecasts are still going to be pretty benign, that they will be considering the need to run an easier than would otherwise be expected policy because of these downside risks, and because frankly, in an economy like Europe or indeed Japan, where inflation is really not really a structural problem, therefore they have the opportunity to run policy on the very easy side.
Peter, stick around. We need to talk about Friday's payroll number. We need to talk about the curve steepening that we saw at the back end of last week as well. Come back in just a moment. We'll do that with you, and we'll try and figure out exactly where the Fed is going to do next. A refocus on that payroll number. It is important. It's really important right now. We'll do that next. This is Bloomberg.
Can come together to help less developed, fragile, vulnerable countries with adaptation and resilience, and we can do what we developed world need to do to reduce the damage being done by our practices of the way we produce energy.
But how likely is it that we keep that 1.5 degrees within reach?
Well, look, the Paris Agreement said well below 2 degrees. That's what everybody signed on to. What is well below? It's certainly not 1.9 or 1.8. It's somewhere close to the 1.5 degrees. And so I think it's very important to do it, because every decimal point of rise in temperature, it is remarkably compounded in the damage that it does. We're at 1.2 degrees today, and you see what's happening. Imagine what happens when you're at 3 degrees or so, which is the track that we are currently on.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, early edition. Weekday mornings on Bloomberg Television.
Let's check in with the Bloomberg First Word News. I'm Laura Wright. The price of aluminium climbed to its highest in more than a decade following a military coup in Guinea. The West African nation is a major exporter of bauxite, the raw material used to make the metal. The head of Guinea's special forces says he took action to address financial mismanagement and corruption. He's urged mining companies to do the same. The Taliban said that international flights from Afghanistan will resume shortly. Both Qatar and Turkey are helping restart operations at Kabul's airport, restarting international flights and allowing safe passage to Afghans who wish to leave are key to the Taliban gaining legitimacy overseas. Banks are warning they're not ready for the European Central Bank's historic climate stress test next year. That's according to a survey of the major European banks conducted by Bloomberg. It's the latest sign that the finance industry is struggling to adapt to Europe's ambitious goal of steering capital away from polluters. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Laura Wright. This is Bloomberg. Guy.
Laura, thank you very much indeed. So it's Labor Day in the States, a good opportunity to recap Friday's payroll number. Hiring downshifting sharply in August. That was the big takeaway. The world's largest economy adding fewer jobs than expected last month, sparking a little bit of speculation on what the Fed's next steps will be. We talked to a whole range of guests about this very subject. Here's what they had to say.
This was a materially lower number.
It's a weaker report.
The first read is definitely this has some Delta variant on it.
This is the long game right now coming out of a worldwide pandemic.
There's one huge red flag for me in this payrolls report.
The hospitality number and the restaurant number.
0 jobs were created in leisure hospitality.
We had almost 0 gain this month in that area.
You'll get some bounce back here in September.
The market's looking through this and seeing, hey, this is temporary.
Tapering is still very much on the table.
The Fed is going to taper.
The market is now pushing back any sort of Fed taper announcement to November, maybe December.
They don't need to rush into it. And the most important thing not to lose sight of here is the emphasis that tapering is not tightening.
Tapering is not tightening. If I was to take 3 words away from what we've just heard, it is temporary, taper, and Delta. Delta clearly having a meaningful impact on these numbers. Certainly policymakers at the White House very much flagging that. The question is, as we go into the autumn, as we go into the fall, are we going to see a pickup in numbers? Are we actually going to see maybe what we've just seen Friday being replicated over the next few months? Or was it just a blip and we bounce back next month? These are key things that the Fed is going to have to focus on. Peter Chatwell, Mizuho head of multi-asset strategy, also looking at these issues as well. Peter, what was your takeaway?
Look, this wasn't a massive setback for the economy. What it was a big setback for the hawks, who've been really championing that at the same time as we have this big labour market recovery, we also have inflation possibly running out of control. We simply don't buy that inflation is running out of control. What inflation is doing is running hot. We can see the evidence building that the inflationary pressures are starting to decline. It's still next year going to be running above the levels it was running over the last decade. But out of control, it is not. And therefore, an urgent tapering and tightening is really not what the doctor orders. And if for those that want the US economy to be able to escape the liquidity trap, that is.
Okay, but Peter, if you take a look at the numbers, the one thing that maybe did stand out was while the overall number was low, the wage number was starting to pick up. In fact, it has been picking up for really quite some time. It's that kind of second round effect inflation that central banks really fret over.
Yeah, and look, that sort of wage strength, one is a function of some of the jobs which weren't created last month being in the lower paid sectors. But more generally, on the discussion of wage growth, we really do want to see it higher if the US is going to credibly be able to sustain, say, a core PCE level of somewhere like 2.5% over the next year. That's the sort of level we actually see it coming in at And we would expect that the Fed will be looking through that and not urgently tightening in response to that. So wage inflation is a necessary part of that. Otherwise, simply the US doesn't get out of the liquidity trap.
Peter, the curve steepened up a little bit. There's an expectation that maybe things stay a little tighter on the short run, and maybe actually we get a bit more supply further down the road. What do you think the taper timeline looks like right now?
Basically what I'm assuming when we're plugging numbers into our model is that taper is announced somewhere around November. Could be earlier, could be later, but the taper in earnest begins in January and is finished by around about July or August time. What matters in my mind, given the amount of liquidity in the system, is when does the tapering finish and what is the terminal size of the Fed's balance sheet? And what's really crucial to me is that taper timeline, I think, has been effectively decoupled from the timeline of the rate hikes.
Peter, we're going to leave it there. Interesting question actually coming in from a viewer on the IB about the PPI number we've got coming up. Super hot PPI out of Europe recently. Are we going to see that replicated elsewhere? Peter, we're going to leave it there. Always great to get your input. Thank you very much indeed. Peter Chatwell joining us from Mizuho. Coming up, we're going to hear from VW's CEO, Herbert Diess, on his company's push into self-driving technology. Software, a huge part of what he sees this company doing next. This is Bloomberg.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
The Motor Show is on in Munich, and VW CEO Herbert Diess sat down with Matt Miller earlier today. He was talking about the semiconductor shortage that has been plaguing this industry, indicating that it might last months or even years. He's also pushing this company very hard when it comes to not just the mechanics of EVs, but the software that goes with it.
We need time to get electric, because we need the capacities, the plants for the battery cells, and that will take time. So we are running at probably 6% electric car sales worldwide. In Germany, 20%. In some of the countries, already 70-80%, no? Norway, Sweden, Holland. And it depends a lot on the local policies, no? And where the policies are in place to change, we are very fast. Could we be faster? Not a lot, no? Because the supply chains for batteries, for the new technologies, the capacities we set up are such that we are fully booked, and we hope to continuously grow, but until 25, we are aiming at 20-25% EVs, which will be a tough target because of the supply chains.
But you need to double your sales. You're going to double your sales of electric vehicles every year?
Exactly, yeah.
In terms of the semiconductor shortage, it looked like for a moment it was going to be a bottleneck issue and then come back, and now there's a double dip.
Yeah.
How does that play out?
Yeah, we expected, actually, you're absolutely right. We expected after the summer break a relief situation as we set up a lot of recovery plans and bought additional